Bloomberg's world headquarters in New York, I'm Kaylee Lines, and this is Bloomberg Green. What will the world look like in 2050? Will global temperatures have stabilized, electric vehicles be abundant, and solar and wind power homes around the world? According to Marco Alvera, the CEO of Italian energy company Snam, that vision of the future could be a reality. And he says that hydrogen will pave its way. As he tells it in his new book, The Hydrogen Revolution, Alvera's moment of reckoning came in November 2018 when he tasked the Snam Scenarios team with studying how Europe could reduce its CO2 emissions to zero by 2050. Looking through the results of the study, Alvera said he was struck by how much hydrogen was in Europe's energy mix by that year. Beyond the abundance of hydrogen, the SNAM model also predicted that it would be the cheapest form of decarbonized energy for many sectors, and that it could be cheaper than today's prices for oil, coal, and nuclear power. Our Maria Tadeo spoke with Alvera at COP26.
It's happening all very fast. We see the cost of hydrogen coming down a lot. Hydrogen will play a big role in the energy mix. I don't know if it's going to be 15 or 25% of a fully decarbonized energy system, but it's going to be big. Costs are coming down, and people are waking up to the fact that it's the only way to decarbonize certain sectors, so-called hard-to-abate sectors.
And you say it's the only way and the costs are coming down. Where do you see prices moving? Because a lot of the reticence at times has to do with the pricing, that some argue, well, it's still not the cheapest option on the market.
So when I was first working in hydrogen in 2004, it was costing $1,000 per megawatt hour. 2010, $600. Today, $100, and we see it going down to $50 in 5 years' time, and to going down to $25 per megawatt hour in the next 10 years or so, which is a quarter of where it is today. That's really because renewable energy, and we're talking green hydrogen here, renewable energy costs are falling, but the cost of making the electrolyzer, which is the kit that you use to convert solar or wind energy and water into hydrogen, the cost of this kit is falling a lot because it doesn't really exist on an industrial scale. So as we build up capacity, we industrialize it, we standardize it, and we squeeze costs out. That's really the cost trajectory.
And for that, of course, you need demand, however, for governments and also institutions to kind of buy into this idea that it is the future and we want to invest and create infrastructure. What are they telling you? When you speak to governments, when you speak to officials, are they keen on this?
They're very keen. So the Department of Energy shares our view in the States of getting to below $1 a kilo, which is $25 a megawatt hour. The European Union has a hydrogen strategy, which is very clear, and several member states have the same. Chile wants to export a lot of hydrogen. China's big on hydrogen. Australia is very big on hydrogen. Japan is blending already hydrogen. So I would say the world is now really focused on this because it's the only way to store energy for a long period of time economically is to convert it into either a liquid or a gas.
And of course you talk about the price, but the other big component is the volume. You know, how big can you go? Where do you see that on a time scale?
So wherever it's sunny or windy, you can produce very cheap hydrogen eventually. And so compared to oil and gas, which are concentrated in few parts of the world, it's going to be very democratic from that point of view. So every sunny place, every desert, every ocean wind can be turned into hydrogen that we can put on ships, in pipes, and really start trading it around the world. So it's going to happen a lot faster than a lot of people think.
So, and when you say a lot faster, what is that in time?
As I said, $50, which is essentially oil parity within 5 years. And then, depending on how quickly we ramp it up after that, we could get to $25, which is coal parity before the end of the decade.
And in big scale.
In big scale, because once you get to coal parity, that's the only way we're going to get China and India to stop burning new coal. We have businesses in China and in India, and I see a lot of hydrogen development, a lot of renewable development in both countries. The India announcement was incredibly strong on 2030. Some people were upset about the 2017 net zero deadline, but when it comes to 30, he announced a big commitment to get to 50% renewables.
Were you surprised by it?
I was surprised that they would make it so explicit, and even the net zero is a big thing for them. And so I think it will happen faster than 2070 because of the falling cost of renewable and hydrogen. India's burning 80 gigawatt of oil, of diesel, to keep the lights on. So there's an immediate opportunity there, and we're very interested in working in that country.
And with regards to China, perhaps the fact that we haven't really seen them active, I guess the diplomats are working on this, but we haven't really seen the leadership.
It's going to be technology, it's going to be industry. I think China has committed to a net zero, which is very important. At the G20, China was clearly behind the 1.5 degrees. So I think a lot has been achieved between the G20 and COP. And I think what's really important is to see in the coming years how quick it's in our hands to make part of this happen in 5 years, or it could otherwise happen in 15, 20 years. It's about building the project. The capital is there. We saw how many trillions of dollars are already committed. What's missing is really the projects, and that's where companies like us step in.
Marco Alvera, CEO of SNAM there, speaking with our Maria Tadeo. Let's turn now to the aviation industry. It's a big contributor to global greenhouse gas emissions, and it's under pressure to change that. In October, the International Air Transport Association, a trade body representing airlines, approved a target of achieving net zero emissions by 2050. To achieve that, many airlines in the US and Europe are looking to buy sustainable aviation fuel made from renewable sources like used vegetable oil. Initiatives like these are pushing plane makers to come up with some radical new aircraft that will eventually cater to our growing appetite for travel without hurting the environment. We took a look at how Airbus, the world's #2 aircraft manufacturer, is stepping up to the challenge.
How long until we can fly emission-free? Airbus says it's more confident by the day it can be done by its 2035 target. Airbus's CEO spoke about its ambitions for hydrogen-powered planes at the company's summit in France.
The physics works. Hydrogen technologies are not new. They are used in other sectors. We use them in space on our rockets, and we don't need the laws of physics to change to be able to use hydrogen on our planes. So every day we become more confident, but we think we need to have a plane, we need to have the right fuels, the hydrogen available in the right quantity at the right place at the right time, and we need the regulations to be ready. So we really need the work and the collaboration of many people around the globe to make it happen on time.
But it could be a long wait until green passenger jets go mainstream. Larger aircraft with more than 150 seats are not expected to feature globally until about 2050. That means manufacturers and airlines today are under growing pressure to ramp up short-term innovations to cut their carbon. In the long term, meeting the ambitious plans for so-called green hydrogen means building a giant industry almost from scratch. To make that happen, British airline EasyJet is among those saying governments need to get involved and fast. Aviation's emissions over the last 3 decades leading up to the pandemic grew by about 80% to over 1 gigaton, and that's projected to double by 2050. According to Bloomberg NEF, about half of the airlines with the largest global market share have set net zero targets by that same date, nearly 3 decades away.
Coming up, from blue sky projects to the bottom line. We'll speak with our Bloomberg NEF expert Meredith Annex and dig into their models about how hydrogen fits into the future energy mix. This is Bloomberg Green. Bloomberg's world headquarters in New York, I'm Kaylee Lyons, and this is Bloomberg Green. Now let's bring in Meredith Annex, our Bloomberg NEF hydrogen specialist, to talk more about how hydrogen could change the energy landscape. So Meredith, what place do you think hydrogen is likely to have in the future energy mix globally?
Hydrogen's this incredible solution for us as we look to decarbonize because it's a perfect solution in areas that are hard to electrify. So where we like to think about hydrogen playing a role, it's in things like heavy industry, especially where you need a feedstock as well as energy source, and in things like dispatchable power, long-haul transport, maybe even shipping and aviation.
That sounds great that it can be used for such diverse industries. At the end of the day, though, how much is this going to cost?
Well, that's the amazing thing about hydrogen, because depending on how you make it, it can actually see significant cost declines in the future. So when we're talking about clean hydrogen, we usually mean green hydrogen produced from renewable electricity. And in that case, your hydrogen is almost as cheap as the renewables that are used to make it. So if you're in a place with really good renewable resources, you'll be able to have cheaper hydrogen. But even in places with less good resources, we think that hydrogen can be cheaper than $1 per kilogram, which is the price of unabated hydrogen today, and around $8 per million BTUs for those who prefer to think in energy units. And that can be achieved anywhere in the world by 2050, we believe.
All right, so let's talk about kind of the pros and cons list. I don't know where cost fits into that, but what are the advantages to hydrogen over other renewables, and then what are the drawbacks?
Yeah, main advantage is the fact that hydrogen can serve roles that electrons struggle with. And that's things like seasonal storage, for instance, or just anything where you need storability, where electrons are harder to store, hydrogen is going to be easier. That also leads to a downside, though, because hydrogen is less energy dense than the usual things that we use for storable energy today, like coal or oil or natural gas. So you will need more volume of storage to handle the same amount of energy.
Let's talk about the viability as well and how it may differ in different geographies. What is your view on that?
Yeah, so for green hydrogen, again, from renewable electricity, really places with the best renewable resources, things like Latin America or the Middle East, even Southern Europe, have really, really good potential for producing hydrogen. And then when you're looking at blue hydrogen, which is produced from natural gas or coal with carbon capture and storage, we do see that becoming more expensive than green hydrogen in the future, especially as renewable electricity costs come down. But that can be a viable option in places like the US Gulf Coast or Russia, where you've got good geological storage for the carbon, as well as ample natural gas that's quite cheap.
All right, great breakdown. Thank you so much to our Meredith Annex, our Bloomberg NEF hydrogen specialist. And of course, you can get more from the Bloomberg NEF team on the terminal and online. And they've recently done a podcast called Hydrogen 101 as part of its Switched On series. So from iron ore titans pivoting to cleaner energy to talk of a hydrogen revolution, that's it from this week's edition of Bloomberg Green. We'll be back next week with a deep dive into the state of electric vehicles. And you can keep the conversation going by following us on YouTube, Instagram, and Twitter @Climate. I'm Kaylee Lyons from Bloomberg's world headquarters in New York, and this is Bloomberg Green.
The great sci-fi art of the mid-20th century teased a vision of the future with one distinct element in common: a life for humans in outer space. Whether vacationing on an exotic new planet or commuting to the moon for business, space travel seemed like it was just around the corner. Yet here we are, a half-century later, and only about 500 human beings have ever left the bounds of Earth's atmosphere. But thanks to a set of ambitious private companies betting on the promise of space tourism, that long-awaited future could be here sooner than we think. For most of the history of spaceflight, governments have been the prime force behind nearly every aspect, from planning to funding to crew selection. But as early as the 1980s, proposals for commercial space tourism began to emerge, along with innovative solutions for getting people there, such as the wild concept of sticking a 74-person passenger cabin in the cargo bay of a NASA space shuttle. Although various non-astronauts have been selected for missions over the years, true space tourism didn't happen until 2001, when an entrepreneur named Dennis Tito coughed up an estimated $20 million to hitch a ride with the Russian Federal Space Agency for a week-long vacation aboard the International Space Station. 20 years later, we're seeing a new contender in this final frontier of tourism: private companies.
It's becoming a private enterprise situation, still very high risk with a high reward, potential reward. But, government is really out of the business of flying people now, and it's really going to be companies like Elon Musk and Jeff Bezos and Richard Branson that do that heavy lifting. Commercial space tourism is usually about taking the non-astronaut, the private citizen, into an orbital or suborbital flight. So you get a short amount of microgravity experience, and you can float and take some photos. And then you come back. This was something that technology had gotten to a point where the private sector was going to make a business out of this. There are multiple companies that want to get to the place where they fly people into space.
The first of these is Blue Origin, founded in 2000 by Jeff Bezos. Using the autonomous rocket system New Shepard, a tribute to the first American in space, Blue Origin plans to launch up to 6 passengers at a time, offering a rarefied treat of 62-mile-high views and a momentary experience of weightlessness. Booking officially kicked off in May 2021, with the very first seat to be auctioned off for charity. Meanwhile, Richard Branson's Virgin Galactic has also been pursuing a viable form of suborbital tourism, aiming for a launch in 2022 once Sir Richard himself has taken a flight.
I'm hoping to be able to go to space. I'd love to be able to coincide it with the moon landing and go to space. So I've got the whip on the team, and we'll see how we go.
The company claims to have lined up over 600 seat reservations so far, including Justin Bieber and Leonardo DiCaprio. Virgin has projected that the final cost of the ticket will be at least $250,000, or roughly $50,000 for each of the 5 minutes or so of weightlessness that you'll get to experience. Although costly, both companies' offerings aim to make suborbital flight a regular form of adventure travel, eventually driving down costs at scale to expand the customer base beyond the orbit of celebrities and billionaires. The third major contender is Elon Musk's SpaceX, which has set its sights even higher on orbital flights, which are
a whole nother level of complexity and energy and danger. When you go suborbital, if you're just going to go up above the von Karman line, which is 100 kilometers or about 62 miles, you only need to get up to maybe 5,000 miles an hour to get up there, and you go basically straight up and then straight back down. You don't have the reentry heating that you would see coming in from an orbital. So when you go orbital, I don't care if you're a baseball or a battleship, you've got to go 17,500 miles per hour, not just 5,000 miles an hour. The energies involved are much greater. By doing that, SpaceX has gone another level up, and that's what they're doing with the Inspiration 4.
Visit inspiration4.com for your chance to go to space.
Inspiration 4 is the first planned all-civilian mission into orbit, slated to launch in late 2021. The crew will bring their own set of diverse perspectives and backgrounds and experiences to test how a group of different people, namely people who aren't professional astronauts, could fare in space.
Until now, astronauts have had to be physically perfect, and this mission is changing that. And so I feel incredibly honored to be representing those who aren't physically perfect. At age 10, I was diagnosed with bone cancer, and I was treated at St. Jude Children's Research Hospital. And I spent a year there undergoing intense chemo and also surgery that ultimately saved my leg. I now work at St. Jude as a PA, a physician assistant, and I work with leukemia and lymphoma patients. The kids we work with are so brave, and they are very excited to watch me go to space because this is showing them that, you know, they're capable of doing this as well.
Haley, along with 3 other crew members, will spend 3 days in space, orbiting the Earth every 90 minutes before landing back off the coast of Florida.
Well, when you think about access, the first astronauts for the United States came from the test pilot side. And so women weren't allowed to be a part of that. We have somebody in their 20s, somebody in their 30s, somebody in their 40s, and somebody in their 50s. And so there can be access in all kinds of ways, whether you're talking about age, whether you're talking about gender, whether you're talking about race and ethnicity, and all of those things.
The first time, people are going up into space and not sent there by a superpower like the United States or Russia or China. Well, that's really significant. And you've got to be very thoughtful about it. The whole game plan right now is to make space really affordable and accessible for everybody, so that you can have fishing buddies going to space someday. But the first is special, and so with that, we wanted to have a crew selection process that could make space available to everyday people.
Getting to space is only the first step for space tourism. The next challenge is what to do and where to stay when you get there. Axiom Space is planning to launch the first segment of a new commercial space station in 2024. Their $2 billion project, called Ax Station, will become the first free-flying private international space station. Or, to use a more consumer-friendly term, a space hotel. Axiom isn't the only company out to make your space stay a little more comfortable. Bigelow Aerospace has been building what they call expandable habitat technology, like their B330, an inflatable pod module that expands once in orbit.
There's even one attached to the International Space Station right now they've been testing. And you take it up, and it's rather small, and then you inflate it, and it seems to be working very, very well. This is likely to be the first kind of tourist hotel that you're going to see up in space. First of all, it's easier to carry instead of this giant tin can with all of that. The inflatables are lighter. You can just blow them up, and they get a nice big size for about less than half the weight probably.
But even as space missions become accessible to civilians,
the risks of going into space are incredibly high. And you could die 1,000 ways that we can think of and 1,000 other ways that we can't think of.
This is Michelle Hanlon. She's a space lawyer at the Mississippi School of Law, focused on protecting humans in outer space.
Now, I'm not an attorney for any of the space tourists, so I haven't been privy to their private contracts. But I can tell you that the FAA requires certain waivers to be in those contracts. So, for example, the FAA says, well, we're not going to make you make your spacecraft to a certain safety level. We are going to make you, spacecraft operator, make sure that you inform your space tourists of all of the hazards that you know of. I imagine a very long waiver, all the ways you can die in space. And you have to understand that there's health risks, and you have to indemnify the US government if you are launching from the United States. So those are things that we know a space tourist has to sign and has to waive. So now let's go back and think about our space flight participants. The FAA calls space tourists space flight participants. They don't call them astronauts. Why is that important? If you're not an astronaut, there's no obligation to rescue you if something goes wrong. It's a lot of money to set up a rescue launch. If it can even be done, it's something really important to think about, and that difference as we cross this threshold from having astronauts in space to having real people like me in space.
And when we are able to make it to space reliably enough, there's still a host of other legal and ethical issues to consider before space tourism can truly take off.
There are so many gaps in space law that we are going to have to put in a lot of sort of basement ideas. And so, for example, the Outer Space Treaty is a treaty that offers principles and guidelines for state activities, for the activities of national governments. It doesn't talk about private entities. It doesn't talk about humans in space. So now if something goes wrong, so let's think about all the times hotels on Earth are sued, right? So slip and falls. You step on something in the bathroom, you sue the hotel, and it becomes a private lawsuit. Because of the vagaries of international law, If something happens in space, well, boy, you can sue the state that launched your spacecraft. You can sue the company that brought you there. You can sue the hotel. You can sue the individual. You can sue every government related to that, because the way the Outer Space Treaty and the Outer Space Regime have set this up is that anything that happens in space first has to go through a diplomatic channel before you think about suing in a court of law. And so every single slip and fall in a space hotel is a diplomatic nightmare. And so we really need to figure that out before we start sending a lot of people there. You think about human rights in space. Here, we don't think about a human right to oxygen because it's kind of all around us and free. It's not in a space hotel. So what happens if something happens and the oxygen depletes? Who gets the oxygen first? And then, of course, let's not even think about the labor. How do you treat your labor in a space hotel where that person may be there for 2 or 3 years without coming back to Earth? So a lot of things to think about.
Space habitats are more likely in the near future to focus on research missions and be a home for experiments that can't happen as easily back on Earth.
Space hotels, I think they garner a lot of headlines and a lot of news, but at the same time, that's not the first thing that you're going to see happen. They don't offer the compelling business case, I think, that you'll see from a place that wants to manufacture pharmaceuticals or a new type of crystal or some type of filament or fiber optic cables and other things that you can do in microgravity. The things that are actually, a high value finished good, when you get that back to Earth and you sell it for a very, very huge profit margin, that's what's likely to happen in space, as opposed to having a real estate platform that you sell to a tourist. A space hotel is really interesting, and it will probably happen, but it's not likely to be at the forefront of space commerce.
Even if space hotels are right around the corner, don't get too excited about booking a trip in one.
It's not a cheap ticket to ride to space, and it's going to be, millionaires and billionaires and that sort. But at the same time, the point was made that in the early days of airline trips, that was also a completely unaffordable ticket for most people. Those people who flew were people of means, and over time it becomes affordable to the masses. And I think that's the goal for all the entrepreneurs in space as well, to get those costs down to a point where it's not $10 million or $5 million or $300,000 ride into suborbital space. When it becomes more like buying a first-class ticket to go to Europe from the United States. So that's the goal, and the question is, can we get to that point?
Given the immense operating costs of getting to space, it may be years, if ever, until space tourism becomes a profitable venture for any of these companies. Virgin Galactic, the only publicly traded company of the three, has had a particularly rocky year, initially riding on the momentum of a SPAC deal, but more recently beset by launch delays and major funders, including Branson himself, selling large quantities of their stock in the company.
Space is really, really, really hard, and it's an absolute cliche, but it's one that happens to be very true. It's just really hard to do. That's also the reason that you've seen the delays that, Virgin had talked about flying years and years ago. And it became such a crazy point that Richard Branson actually stopped talking about it when he was asked, because it was never going to be when he predicted. But it's not insurmountable. And, investors have stepped up because this is something that is doable.
Despite the astronomical dangers and costs of getting to space, it may ultimately follow the course of other once fanciful modes of travel.
Wright brothers having, what was by modern standards a very unimpressive first flight, at Kitty Hawk. I mean, you had less than 20 years later, you had your first airborne ambulances being used to save lives. Fundamentally, the world is a more interesting place when people can go and dance among the stars and such.
The lure of space is innate. It's in our DNA. It's that exploration bug. We are an exploratory species, and we want to go out there and see what's out there.
That vision that I had in 1969 of seeing normal human beings travel into space, it's finally beginning to happen. When you get a bunch of people up there and they can all see it for themselves, that'll create even yet another revolution in how we treat our planet and the way we think about it.
So while 2001 came and went without quite looking like Stanley Kubrick's ultimate space fantasy, 2021 might finally be the year we're catching up.
If you visit California, you might be inclined to go to Disneyland, or jump in your convertible and take Highway 1 up the coast, or maybe make a pilgrimage to Yosemite. All very fine choices. But if you're the kind of person who revels in our planet's extremes, then it's Route 395 that you're after. This one glorious road will carry you from Death Valley's desert floor to sky-high views of Mount Whitney. You can see the 5,000-year-old bristlecone pines, the oldest living organisms. Or the bizarre tufa towers of Mono Lake. And true to California's boom and bust spirit, you can saunter around the ghost town of Bodie. What a novel experience to find an empty American city where all the businesses are shut down. To do 395 upright, it helps to have a guide, and mine is a man named Jan, and his crew, Heron,
Let's tidy up first.
and Lemmy, the hardest partying dog of all time. Jan agreed to show me some of what 395 has to offer, but only if we agreed not to disclose any locations.
My name is Jan Swirstra. I'm an industrial designer out of LA, and I spend a lot of time camping and a lot of time in the Eastern Sierra. It's a place I love, and sometimes I'm known as 395 North because my Instagram account, and I don't like to be known as that, but I'm trying to use it to set a good example and do more with it than just social media.
Where did we end up camping? We got here late last night. I wasn't even sure where we are.
This is BLM land, right on the outskirts of National Forest, and it's one of my favorite places in the world. Basically, everything outdoors wrapped into one.
Yeah. Good thing about California, man.
Oh, man. We have so much national forest and public land that you can literally just cruise out and find a place to camp. It's ours.
What I wish was mine is Jan's sweet truck.
It's a 2019 Ford Ranger. Has about 200 watts of solar in it and a fridge, and has everything that an RV has except for a toilet, but just on a smaller, simple scale.
And you drive us around day to day in LA.
Yep.
And then just roll out when you want.
It's my daily driver. Handles great. And then when I'm done with work, I can just bail and go camping. So the camper basically has only what I need. Think of it as backpacking with a car.
Yeah.
The fridge has a couple compartments. This is just a kitchen box, stove, utensils, and a bunch of stuff. This one has just dry food. Then when you get inside, there's a bed. The bed flips up, so you've got tons of room in here. This awning is phenomenal. If you want to pull that over.
That's cool.
Let me just pop that up.
Sorted.
So, home on wheels.
Yeah.
This is my vacation house.
Dude, it's so nice, man. Even with his nomad lifestyle, Jan faces the same big question as the rest of us. Do the internet and smartphones have to ruin everything? When you find the super special, beautiful spots, is that you busting out a map and like looking where it might be cool to go, or is it word of mouth and just getting to know people, the locals? And
if I see a dirt road, I just want to go down it. So a lot of it's just aimless rambling. It's a desire to just see something. Check that out. For some reason, it's more fulfilling than getting a recommendation from somebody. Or there's tons of apps and websites now, road trip apps, camping apps. They've proliferated. The knowledge is accessible on the internet. I used to fight the geotags, and I would get really pissed off. Like, why are you posting this place? It's gonna blow up, it's gonna get trashed. Now I've realized that you can't fight it. The internet has just shrunk the world. So we're not gonna stop it. We're not gonna stop people from going there. So I'm a lot more focused in conversation now with trying to set a good example. When you go, pick up your trash. When you're pooping out in the wilderness, don't leave your toilet paper on the top. You know, make sure you follow, good steps for leaving no trace.
As a thank you for this quick guide to pooping etiquette, we made Jan, Heron, and Lemmy some tacos. And we all took in the night sky and knocked back a couple of drinks. Take that, Apocalypse. The thing about good times and serenity in 2020 is that they're fleeting at best. After we split up from Jan and continued on our way, smoke started to envelop us. The plus side was that our RV no longer smelled like feet. The downside was breathing. My man David here suggested that we try and outflank the smoke by cutting through Yosemite. Without a reservation, we had to talk our way in.
Yes, no stopping, no getting out, and yeah, no problem. We just wanted to get through.
It was a beautiful choice. Glad we got out of the smoke. Whoa, okay. But not quite as effective as we had hoped. Fast forward 4 hours or so, and we had managed to trade the smoky majesty of Yosemite for the smoky, look at it, strip malls of the Central Valley. We have made it, sort of out of the smoke, all the way across Yosemite National Park and here to the gorgeous Central Valley of California. We're off to see a kind of surprising tech startup that is making some pretty strange machines to serve all the growers out in this region. And we're here in this near Fresno. This is California farm country, right?
We're just south of Fresno, a town called Kingsburg. So we're right in the Central Valley of California. Very, very large farming Valley here. It's kind of considered the breadbasket of the world.
The Central Valley stretches out over about 20,000 square miles, and the farmers here produce about 1/4 of the food that Americans eat, including a whole lot of fruits and nuts.
Tell me a little bit of the background of Gus. I know some of this is like a family business. The roots of this go back a ways. Tell me kind of like how we got to what's essentially like a startup, I guess.
Yeah, definitely. So the founder of our company is Dave Crinklaw, and he started the business back in 1982. He started with is basically with his dad was commercial spraying of trees and vineyards. Got to the point where our biggest challenge was labor, just the shortage of it, really. He was forced into innovating, and he had this idea for quite some time about doing a driverless sprayer, and it finally got to the point where he said, you know what, I either got to get out of this business or I'm going to innovate.
Organic or not, crops need to be sprayed, and this process has to take place a few times a year. This means hiring a lot of people to work long hours under serious pressure. And so, just like the tech bros to the north, Gus decided to solve all of its problems with robots.
On this like labor point, you guys have set this up where you can have somebody in a truck and that one person can monitor, I think, like 8 of these.
In order to operate Gus, you have one guy or girl that sits in a pickup and they monitor from a laptop computer. So that person is basically just watching all the vehicles on the screen. They can monitor up to 8 of them at a time while they're out there spraying in the orchard. And so that user interface really provides them with all the information they need to make sure that the machines are safe and that they're doing the correct job. So it tells them what speed they're driving, the engine RPM, the amount of gallonage per acre that they're applying at any given time. So if any one of the machines has an issue, it's going to send an alert to that laptop.
Much like a self-driving car, these beasts use GPS, LiDAR, and cameras to see and navigate the world around them. They also rely on pre-built maps of the orchards for extra guidance. Gus builds the machines right here and then takes them out for robot training on this orchard next door. It's here that the company learns if the machines will behave and do as their software and human masters command.
So this is kind of like this is a test orchard where you guys put it through the paces and work on the technology?
Yeah, so this is our test orchard right here. It's right by our building, as you can see in the background. So every new machine, as it comes off the assembly line, it's put through a commissioning test right here. We test all the sensors on the machine, autonomous computer, all the safety systems, make sure it's doing what it's doing prior to when it's delivered to a customer.
So what's it doing now?
So right now he's doing a test spray. So he's just turning the water on to make sure that the system comes up to pressure, spraying water out of the nozzles just to make sure it's all functioning properly.
Okay. It's got like a crazy turbine at the back, or?
Yeah, so it's basically just a big fan.
Okay.
And that fan's driven off of the Cummins diesel motor, and it just basically creates a big airflow.
Gus is already selling these vehicles to brave modern farmers. And people the world over have taken notice of its machines.
And have you just sold them in the Central Valley or like throughout the U.S. or even overseas, or where are they going?
Yeah, so right now the majority of our machines are here in California in the Central Valley. However, we do have machines and customers in Florida, in the citrus industry over there, as well as Australia.
And I think you started selling them in like December of 2019.
Yeah,
right?
So we started taking orders early last year for the sprayers, and the first deliveries we made were in December of 2019.
Okay,
so.
And how much do they cost each?
So our retail price on these machines is $285,000.
So it's not a small investment, but I'm sure the regular sprayers aren't cheap.
Yeah,
either.
I mean, we're honestly not too far away from conventional equipment on our price, and the main thing is that the return on investment is very, very quick due to all the labor savings and the increased efficiency. I mean, these machines, they just thrive. But basically what we're doing, besides this machine, this is our first machine. We call it Orchard Gus, mainly designed for your nut trees, as well as citrus and fruit In the future, we're working on a few other projects. We're going to do more machines. One of them is actually a vineyard sprayer. So vineyards are much tighter spacing, so the machine has to be physically smaller. And then we've got our eyes on doing a lot of other innovating.
That right there, friends, is a Central Valley farmer putting his whole fruit basket on the table. Gary's TED Talk can't be far off. And with that, it was time to get back in the RV and to confront what happens when three men are bested by their own failings and the forces of entropy. Next on Hello World, we cruise into the Mojave Desert in search of a lunar lander.
We have instruments that we are going to deliver to the South Pole of the Moon in December of 2022. Instruments that are trying to scan the surface of the moon.
And hang with a test pilot who walked away from this.
Meet Betty. She lives by herself, but for the last few months, she hasn't been alone.
LQ, tell me a joke.
Did you hear about the claustrophobic astronaut?
No.
Apparently, he just needed a little space.
Most technology isn't made for 93-year-olds. But this woman is making sure that this particular robot is.
LQ, who are you?
She's researching the way we interact with machines. And if she has her way, robots will soon be a trusty companion for all of us.
My name is LQ. How can I help you?
As technology replaces old jobs, it's also creating new ones. I'm Aki Ito, and I'm here to show you the jobs of the future.
My name is Danielle Ishak, and I am a human-robot interaction researcher. It's really hard to intuitively design a robot meant for a consumer audience. You have to make sure that it's a robot that people want, people know how to use, and people value.
Danielle works for an Israeli startup called Intuition Robotics. Its U.S. office is here in downtown San Francisco.
Hello.
Hey Danielle, it's Aki.
Come on in.
The company is funded by a couple big names like Samsung and Toyota. Full disclosure, Bloomberg's venture capital arm is an investor too.
This is LQ.
Can I take her out for a spin?
Please.
LQ, tell me what you can do.
I am a proactive social robot designed for older adults. I can connect you to your family and friends, and even play music.
These features might remind you of the Amazon Echo, but you'd be missing the point if you compared her to a smart speaker. She's not meant to just be useful. She's meant to be a companion.
Why don't you take a break and have a drink?
And that's why she has a head that can nod and make other subtle gestures you might expect from a pet.
Through our research with older adults, we're finding that almost on a daily basis, we see that somebody tells her that they love her.
Really?
Or that they like her. Or that they miss
literally,
her.
I love you?
Mm-hmm. They'll also tell her, I'm depressed, or I'm lonely. They'll open up to her in a way that they might not necessarily open up to a human because they don't feel like they'll be judged.
LEQ isn't on sale yet. but a prototype is already in the homes of about a dozen early testers who live in the Bay Area.
LQ, tell me what the weather is today.
Danielle's job is to figure out what's working and what's not.
Sorry, please rephrase your request.
And she does that by visiting each of her testers twice a month.
How important are these visits to your job?
They're critical. We're building a product for people who we are not. I'm not a senior, and how could you know how to design for somebody if you don't do research? Because otherwise, you would just be designing in the dark.
Jobs like Danielle's are just starting to emerge. Until recently, robots were mostly in factories, separated from humans. But now, they're finally getting cheap enough, small enough, and smart enough to be in our homes. This has created a whole new challenge of designing robots that people will actually want to interact with. And that's where Danielle comes in. Her research has helped shape every little facet of LEQ, from the way LEQ moves to the way she talks.
It's a very special job, and it can be really hard, and it can be really frustrating, but at the end of the day, it's incredibly rewarding. And I think the most rewarding part about it is when I see the joy on the users' faces, like that they saw their feedback turned into something real.
Today, we've driven east of San Francisco to go see one of Danielle's research participants.
LQ, tell me something interesting.
Did you know that Ronald Reagan was a lifeguard in high school and saved 77 people's lives?
Now, see, this is where a conversation is. She should open up and I should say, no, I did not know that. I expect her to be able to continue a conversation for at least a couple of comments.
Yeah. And why is that?
Why?
Yeah.
Because that's companionship.
When Betty was around Danielle's age, she was working with some of history's very first computers.
When I was finishing up my master's degree, I was working at Harvard in the computer lab when they were building Mark IV. A large room-sized computer. But now, this artificial intelligence stuff is amazing. LQ?
Yes?
Schedule a doctor's appointment.
No problem. I'm working on it.
When Danielle brought along the idea of working with robotics for the elderly, I said, are you kidding me? Will older people connect to a robot? And she said, I don't know, let's research and find out.
Danielle grew up here in this suburb of Atlanta. Her parents spent much of their childhoods in Israel and met in the US.
We as immigrants, we understood that we might need to work a little harder. In fact, I feel that rather than taken away from Danielle, it gave her so much more, because she understood the fact that you need to run after your dreams and work really hard, no matter what the challenges are.
School didn't come easily for Danielle.
I have dyslexia, and that very much affected my self-esteem academically.
The principal of the school did not recommend her to take advanced classes. She fought for it, and she got into it, and she did very well with them, too.
Danielle's first job out of grad school was at X, the secretive research facility founded by Google. It's known for dreaming up all kinds of wacky, far-flung ideas.
Can you tell us about the moonshots you worked on?
No, I can't tell you too much about the projects that I worked on. I can say that I was working on robotics.
She loved the job, but wanted to work on something that would reach real consumers sooner. So she left X after a year and joined Intuition Robotics. She's been working in the field for 4 years now, and it took her a while to find her footing in a male-dominated industry.
I've gone to different meetups where there'll be like a circle of men with their like zip-up jacket with their like company logo on it and a beer in their hand. And I'll come in with lipstick and nobody wants to talk to me. This is my closet.
So at first she did her best to fit in, wearing a pair of glasses she didn't need and toning down her style.
So what's the kind of thing you used to wear to a conference?
Stuff like this, blousy things that make you look like you're 40.
But that got old after a while.
And what's the kind of thing you wear now?
Now it's like I just enjoy being kind of expressive and playful in what I wear.
Before we wrap up for the day, Danielle has one more LEQ tester to visit. Joseph is 97. And he's had the robot in his home for 8 months.
How are you?
I'm fine. How are you?
Good. How has Miss LEQ been?
She always tells me to take a drink of water at least 4 times a day.
So, we added a whole bunch of new facts to LEQ.
Did you know that a cup of chopped red bell pepper contains more vitamin C than an orange?
Okay. What did you think of that?
Certainly, the print was, I could see that quite clearly.
What about this?
Well, I can see that. LEQ, play music.
No problem. It will begin shortly.
By 2050, almost 500 million people are going to be 80 or older. And if current trends continue, more and more are going to be like Joseph and Betty, living alone.
LEQ, stop.
Today, both of them are doing okay. But some of Danielle's other participants have been struggling.
Is it kind of hard to leave them at the end of the day?
It is. Some of our testers are pretty advanced in the stages of depression through loneliness and isolation. And at times, I know that LEQ is cheering them up in their day, but I know that it's only part of the way. No source of artificial intelligence robots will ever be able to replace humans and human companionship or human care.
The key to Danielle's work is to embrace that very limitation of machines.
Robots should help humans do what they love, help humans interact with more humans, help humans in general. Not pull humans away from humans, not take humans' jobs and leave humans without purpose.
Whether it's in our workplaces or in our homes, robots are soon going to be everywhere. And it's up to Danielle to make sure this robot-filled future leaves us just a little better off.
So don't be afraid. And if you are afraid, come and join us, because I promise it's a friendly place.
Times are tough. Jobs are scarce. It's risky to be outside and around others. It seems like there's very few ways to make extra money during a pandemic. So I guess I'll just hunker down and binge social media until this all blows over. Wait, don't these people make money? how do these people make money? Streamers, YouTubers, Twitch stars. How do they make money? Is it a lot? Is it a lot of work? I know, I gotta ask somebody in the biz, and I got just the guy. Austin John Plays.
This is your full-time job now, right?
As of November of last year, yes. This was always just kind of like a side thing. Like any money that I made from doing my videos and whatever else, I never touched that because I didn't really think of that as being like real money. And then it started coming in more and more. And then it was like I hit my first day that I broke $1,000 and I was like, this is actually going to be money.
How did the YouTube channel come to be?
When the game Pokemon Sun and Moon came out for the 3DS, there was like things that I learned about the game, and then I wanted to just share that information with people. And at the time, I didn't have any way to capture a screen or anything, so I found like generic footage, and I kind of put it all together with so much editing. And that video got 6 views. And then 2 days later, I made another one, and that one got 12 views. And then I just started pumping out more and more content, and people were like, this guy knows what he's talking about. It really just started building on top of itself, and then it was like, my channel really focuses on tips and tricks. So I play a straight 18 hours, and I'll finish the game or get to about the 40-hour mark, and then I'll make my first video. While I'm going through, I have a giant notepad and just scribbles everywhere, and I make these notes of like the things that stumped me, so I know the things that may stump other people.
What do you need to think about if you're building your YouTube channel? 1,
you need to do something that you're passionate about. Not that you like, not that you think you're gonna make money on, something you're passionate about. The other thing is something that other people are passionate about. It holds a special place to them. And third is, it needs to be something that people are gonna seek out information on. In order to enter into the marketplace, you either need to be better than everyone else, you either need to be faster than everyone else, or you need to be more accessible than everyone else. And you can't be more accessible because it's already on the platform. Granted, if you understand how the algorithm works, which is very similar to Google Analytics, then yeah, you can have a little bit of a head start. But if you're not doing it faster, and if you're not doing it better than everyone else, then why should anyone watch your channel? So my income as a YouTuber kind of breaks down to 3 different ways. 1, which is the bulk of it, which is ad revenue. Whenever you go and you watch a video and then there's an ad and then you wait 5 seconds and you hit the bottom right corner and then you go on to the next video, or a non-skippable ad, or the video starts immediately, you get the little banner ad at the bottom, or if you scroll down from the video, the first thing that shows there is an ad. Those are the 4 different types of ads that can appear on every single YouTube video. And all of them pay a certain amount. It varies on lots of things, like the country of the person who posts it, the country of the person who watches it, the time of year, where you are in the quarter, if there's anything going on with a reduction in ad revenue. Like, great example, COVID-19, companies weren't spending as much on advertising. So because of that, CPM went down. CPM stands for click per thousand. I'm using the Roman numeral for 1,000. And that means that for every 1,000 views, you get a certain amount of money. Now, on low ads, when I first started off, my CPM was 30 cents. So every 1,000 views, I made 30 cents. But then once I signed with an MCN and I started making more quality content and more engaging content, some of my better videos and certain times of the year, I can see CPMs as high as $12 to $14. And there's a big fluctuation between, you know, if I post a video when there's no ads being spent, like January and February, that's the reason a lot of your favorite YouTubers and also TV shows don't post new videos in that time of year because ad rates are down. Why are they going to make content then? Instead, you're recording and you're bulking up for when ad revenue is higher. The second way that a YouTuber makes income is support, crowdfunding, things like that. When I first started off, Patreon was really the only option, but then they started rolling out supporters and members for YouTube channels. So Whenever I have a live stream, you can click a button and then you can become a member, and then you get special icons next to your name. I believe they're called badges. Or on any video, you can hit the join button, and that helps support the channel. And then the third aspect of that would be merch. And for me, my merch has been somewhat basic. In fact, I'm wearing one of my t-shirts from last year right now. You have to endure the times that your first video gets 6 views, that you posted on Reddit and they say, shut up, and then an auto mod bans you. You have to go through that, because until you go through that and you discover why you're doing it, you're not doing it for other people, you're doing it for yourself. If you're not loving what you do, then it's not worth it.
Huh. So make a channel about something that I'm passionate about. Oh, sweet. I guess I can make the channel about that. Now, how do I grow an audience? How do I get popular?
It's all about diversification, right? You have to have a massive Twitter following. You have to have a massive Instagram following. You have to have a massive YouTube following. Of course, you have to be on Twitch, which is the key platform. But basically, any way you can get in front of your audience, you can engage with your audience, is going to drive those clicks, which ultimately drives the advertiser revenue that you get back from all of these platforms.
It's me and Dan playing video games and talking in a funny manner over them.
They're not just people who are good at games, they're actually people who are good at online engagement, online entertainment, first and foremost.
You have the right to remain stylish. Anything you wear can and will be used against you in the court of fashion.
The streamer is either very, very talented at the game. The best player in the game is generally going to draw a crowd because people like watching people who are very good. On the other hand, they're either very, very good or funny, charismatic, whatever it is on that side.
Oh, no.
You know, it becomes more of a show where they talk about other things outside of the gaming world, and gaming becomes really just a backdrop and an excuse to engage with that audience.
There were those weird, like, Ronald McDonald, like, straight to VHS movies. You remember those?
I'm personable, I'm chatty. I would kind of, when boring things were happening in the game, I would ramble on about, movies I'd watched or books I'd read and, or conversations I'd had and stuff like that. And so I think being personable was a big part of that.
It's not just getting on and playing games. It's getting on and being an entertainer. You are putting on a show.
All right, now let me go ahead and grab the samurai sword that every gym has. Okay, he's dead.
To have a larger audience and to have that audience, I think, stay with you, you have to bring something extra. You have to find your niche. You have to find what works and what connects with the audience and what makes them laugh and what makes them keep coming back.
You gotta make it a little more exciting, all right? Throw in a hanging bishop. Have everybody in suspense for a moment.
I think the real most important thing is to just get used to being on camera. Like in any sort of performance thing, is get used to talking on camera. My first few videos were terrible, but because I sat down and did it for 6 to 8 hours a day, I just got used to talking and I got over that uncomfortable hump.
If you go into Twitch purely with the expectation that you're going to make money, make a job out of it, have all this growth, and it's going to be great, you're probably going to burn out prior. That you're going to make money, make a job out of it, have all this growth, and it's going to be great, you're probably going to burn out prior to getting to that point because there's very little payoff for a long time, right? Like multiple years generally before you really start to see a payoff. And so, those first few times you're streaming, nobody is there. One person shows up every 30 minutes, says hi, maybe, and leaves, right? Like, it's very discouraging, I think, for a lot of people. And so you have to be there just loving it. You have to love talking to yourself when nobody is around. You have to love just the game that you're playing, all of that stuff, because it takes a while. And I think a majority of people burn out prior to getting to the profitable point of it.
And there you have it. My very own YouTube, Twitch, Discord, and streaming channels all ready to go live. It's a veritable social media ecosystem just on the verge of thriving. So, don't forget to smash like and subscribe, and visit my Patreon for perks. Also, go to my merch page. And one last thing, stay cool, my friends.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Massar and Tim Stenivek on Bloomberg Radio.
All right, Paul Sweeney, Michael Regan. We're sitting in for Tim Stenivek and Carol Massar. I mean, they're getting to the dregs, Michael, when they get me and you to sit in for Carol and Tim.
Everyone else is at the baseball game, I guess.
Everybody else. I was coming in on New Jersey Transit today, and lots of Yankee fans all bundled up. I saw them all around the city, getting the various subways, the 6 or, the 4 train up there and everything. So it's a clear day. It's not snowing. It's a little chilly, but, it's baseball.
Yeah, with these new rules, maybe the game's over in half an hour.
Game might be over already. I mean, it's interesting. So, but that'll be fun to watch and see how these players react, see how the umpires react, how the managers react, and then from our perspective, Michael, how their broadcasters react. I mean, you got to change up your whole cadence of the game. So, interesting stuff. So we got a lot of good stuff coming up on this show. Alibaba's a story that I really like. I've liked it since the IPO. They've now announced they're going to split that up into 6 units. The stock's really reacted favorably. And we're going to have Brian Wong. He's a former Alibaba executive. He's going to be coming in.
Yeah, it's not often you see a company. I mean, sometimes you see a spin-off or maybe a couple businesses, but 6 separate businesses, pretty dramatic reshaping. And I'm curious to talk to him because I do wonder if this was all their idea. Maybe they got a little nudge from the government. They got too big.
Good point. I think, the government, presumably that with the stock price going up, it's a good economic decision. But B, maybe it satisfies the pressure that they've been receiving from the government for being too big.
A little too big, yep.
Yeah. And then the other one's going to be fun towards the end of the show. Bloomberg Business Week editor Joel Weber, he's going to be here talking to us. They got a story in the Bloomberg Business Week, Dungeons and Dragons, trying to make some money on that, what the people in Hollywood now call intellectual property, whether it's games, movies, whatever, but that'll be fun.
Dungeons and Dragons. I haven't heard about that since I think my elementary school days in the 70s. I didn't know. I guess it never goes away. It still has a big fan base.
But it's you think about all the money that the Marvel characters have made, just for example, or the DC characters, or even some games like Lego. They'd made a movie out of the Lego. So.
Right, missed opportunity there for Hasbro.
Exactly. So we'll see what they've got brewing there. We're gonna have more coming up on Bloomberg Business Week. This is Bloomberg.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. We've got 60 minutes left in the trading session. I'm Scarlett Fu here with Katie Greifeld. And of course, we're joined now by our colleagues in radio, Paul Sweeney and Mike Regan. And in doing so, we welcome in full our audience across all the different platforms, television, radio, YouTube, and Bloomberg Originals. And Paul, I look at what's happening in the markets and some measure of calm has returned. You have bonds not doing a whole lot, equities moving modestly higher. Even when they paired their gains, they've still held on to their gains.
Yeah, interesting. It's kind of been this week we've seen it a little bit of not a lot of movement, not a lot of volume. I think people are waiting for some economic data to get a little bit more color on maybe what we will get from our Federal Reserve in the upcoming meetings.
Yeah, Paul, I keep my eye peeled to two charts, the KRX Regional Bank Index and the Office REIT indexes, both the Bloomberg Office REIT and the S&P Office REIT Index, because I feel like these two indexes are at the center of what everyone's worried about, a potential credit crunch. And it's interesting, strong rebound for both of them over the past 4 days, and it looked like it was going for a fifth. That Office REIT index was up about 11% over 5 days, but both have faded throughout the day. So the two things, Scarlett, to keep an eye on there, I think, to sort of get a sense of what the concern in the market is. Despite this rally that seems to never end, there is still a lot of concern about this potential credit crunch.
Yeah, I guess for anyone who's looking to continue bidding equities higher, there was some softening in the labor market, so perhaps showing that the rate hikes are having an effect in slowing down parts of the labor market. Jobless claims rose more than expected for the first increase in 3 weeks. So that was seen as helpful if you are looking for the Fed to eventually cut rates.
If you're a central banker.
If you're a central banker as well. The Russell 2000, by the way, is the laggard, actually off by 0.3%.
And if you look at the sector level, you have 10 of 11 sectors in the green on a pretty low liquidity sort of day. But in any case, you have tech leading the charge higher, that sector up by about 1% or so. You go down, real estate also higher, as well as consumer discretionary. Those are your big gainers. You look at what's not doing so well, it's financials. We know it's been a really, really rough month for this sector. Today, no exception. Only down, though, about 0.5%.
So, yeah, I was looking for some movers that, would be beyond the big cap tech names, and I found a couple here. Let's start with the healthcare space. Oak Street Health getting a boost after CVS says it expects to close its $10.6 billion purchase in the first half. You have Sprinklr, a tech name, up by 16%. The software company's revenue forecast topped estimates, and analysts are calling that a positive given the overall economic backdrop. And keep an eye on Brazil. That's the ETF that tracks Brazilian shares. EWZ is the ticker. The finance minister gave first details of the government's new fiscal framework. And of course, Congress needs to approve this plan, but because it targets a surplus in 2025 and 2026, it could be an inflection point where foreign investors start feeling more comfortable putting money to work there. And within the tech space, semiconductor names, it feels like they're getting a re-rating here after Micron's better than expected outlook. So when that feeds itself into the NASDAQ, and in particular the NASDAQ 100, what you see is the NASDAQ 100, the NDX, is in a bull market. It's about to close out its second best quarterly performance in a decade. If you look at the far right, that's the 18% gain in the NASDAQ 100, the white line, but the blue line there is the Fed balance sheet, and you can see that the central bank loosened its balance sheet. So there's definitely a cause and effect there, or at the very least a correlation. You have to go back to, second quarter of 2020 in the height of the pandemic, when the NASDAQ 100 jumped more than 30%, right when the Fed was pumping in a ton of liquidity. So, Katie, this just goes to show how powerful Fed easing can be for tech stocks.
Well, to that point, you have to wonder how sustainable that rally actually is in those tech shares then. We heard from Boston Fed President Susan Collins. She spoke earlier today. Let's take a listen.
I currently anticipate some modest additional policy tightening and then holding through the end of the year. Of course, I'll be carefully watching a range of indicators, including data on inflation, spending, labor markets, and financial conditions.
So, I mean, there you go, guys. This is a much different picture than the second quarter of 2020. We have inflation that is still very much a problem, a Fed that is very motivated to fight it, and yet you have this huge rip-roaring rally in tech stocks.
Yeah, it's going to be interesting to see. It was such a brutal 2022 that get some rebound. But what we're seeing from the tech companies, it's funny, it's not a top-line story anymore. It's about cost-cutting. The companies that are reporting and disclosing cost-cutting moves, whether it's in personnel or CapEx or operating expenses, they're the ones getting rewarded in the marketplace. So it looks like some investors saw some bargains there and liked what they heard on the cost side.
Yeah, Paul, it's interesting. All those headlines we see about 10,000 job cuts here, 5,000 there in the tech sector, really getting rewarded by shareholders. So it does make you wonder about this job market, how buoyant it can stay if there is this aggressive margin protection going on by tech companies, whether that spreads to other industries, Scarlett. But yet, you look at these jobless claims, they're still so very low. There still seems to be plenty of jobs out there, regardless of these tech layoff headlines we get.
Yeah, and the argument there is that for those employees of those big tech companies that are being laid off, it'll be fairly easy easy for them to find jobs elsewhere, including outside the industry, because it seems like every company across every industry is always looking for some kind of tech worker.
I mean, that's the thing. We spend a lot of time talking to economists on Bloomberg television and radio, and the fact that you haven't really seen a lot of these headlines that we get about the tech industry really spread to other sectors of the economy necessarily. And when you think about what industries power the labor market, it's not all tech. So the fact that we haven't seen this widespread layoff story really hit yet, I mean, that explains some of the weirdness that we've seen in the labor market.
And one thing I think I would point out is, we have this strong market heading into a pretty important data point tomorrow with the PCE deflator. It is expected to come down from 0.6% month over month to 0.3%. That's about 4.7% for the core year over year. So, Paul, a lot of momentum in the stock market headed into an 8:30 print that really could change the equation quite a bit if it does come in hotter than expected.
Exactly right. I mean, this is a Fed that's been looking at inflation. They're fighting inflation. They let the banking issues kind of pass a little bit, and they're focused exclusively on inflation. And the preferred gauge is tomorrow.
Definitely feels like we've returned to the normal dynamic in markets. We're talking less and less about banking turmoil. Katie, I go back to what the guest from Janney Montgomery Scott was telling us. Every day without a bank failure is a good day.
It's only Thursday, though. We have, a day and a half to get through, but it's a fair point.
All right, guys, that's it for us. Mike and I are going to get back to work on the radio, and we'll keep a close eye on these markets.
All right.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, Michael Regan, Paul Sweeney here in the Bloomberg Interactive Brokers studio. Looking at these markets, Mike, a little bit of a move up, as we were just talking about with the gang on TV. But you're right, the key issue is going to be those some of that inflation data we're going to get tomorrow, as well as we're going to get some data from University of Michigan on current expectations and future expectations. So a lot of eco data tomorrow to parse.
Yeah, and also you've got that end of the month, end of the quarter. I don't think there was a huge rebalancing impulse this quarter. For the month, maybe a little bit of a benefit for stocks because bonds outperformed in the month. But clearly, people wanting to get into this quarter and show, hey, look at me, I'm loaded up on NASDAQ. It seems like,
Exactly. So we'll keep close eye on that eco data tomorrow. Let's get a look under the hood, see what's happening in those equity markets. We can do that with Bloomberg's Jess Metton. She covers all that equity stuff. What are you looking at today, Jess? We got some green on the screen.
Well, something I wanted to point out, and I know it's something that Mike has been watching pretty closely as well, is obviously we've been talking a lot about technology, but also looking at what's happening with real estate, right? So that sector up also about 1%, but it has been a bit on a tear of late when you're thinking about this, and also kind of brings up the whole point about this sort of search for income, right, Mike? When you're looking at, especially when it comes to these real estate investment trusts that have been climbing, so like Hudson Pacific Properties, Vornado Realty Trust, Highwoods Properties. But what's interesting about it, there's actually been a lot of short interest, short sellers basically stepping up best against these office owners amidst what's been happening in the bank turmoil. So it's kind of behind the scenes when you're thinking about what's driving a lot of these stocks. But obviously, when you're looking at what's happening in the bond market, but then if you're thinking about long-only portfolio managers that have to be invested somewhere, a lot of them obviously been putting their money toward tech and growth, but also, now they've clearly been in some ways turning to real estate and also sometimes utilities as well. So you can obviously
when fund managers, guys, when they come in and they say, go conservative, be smart, be defensive. I just think big cap, I think dividends, I think clean balance sheet.
Yeah.
That's my sense of kind of getting defensive, not getting too far out on the risk spectrum.
Well, yeah, defensive means something different now than what it used to, right? It used to be those utilities. Years ago, you would have thought REITs would be pretty defensive, but not with the vacancy rates that we're seeing in offices now, the 19% vacancy rate. But Jess, I'm curious, one fascinating thing I think about this year is if you look at all the sell side, the major Wall Street bank strategists, I feel like there's not a bullish voice among any of them. Is there any sort of change in tone that you can pick up from reading the notes and talking to these strategists?
Well, I feel like when you think of bullish, Tom Lee over at Fundstrat has for a long time kind of stuck with that type of bullish call. But when you're right, when you think of Mike Wilson, Morgan Stanley, Marko Kolanovic at JP Morgan, very different calls, especially with Kolanovic over the past year, last year really pivoting to the whole, hey, buy the dip mentality, which unfortunately did not work out. But when you're thinking about more bullish, Tom Lee is somebody in particular who has maintained that kind of bullish stance.
Well, I've known Tom Lee for, 25 years. Hermable. Back when he was
right,
back when he was doing cellular telephone stocks, he was the guy. I'm going to bring in Molly Smith. She covers all the eco stuff for us. And Molly, it's going to be a busy day for the folks parsing through economic data tomorrow. What are you looking for?
Yeah, I think the PCE is probably going to be front and center. That's the Fed's preferred inflation gauge, and looks like it's still going to be probably pretty hot in February. That's the month that this is evaluating, and definitely well above that 2% target. So that's probably going to keep, the Fed at least affirming what they put out in the projections last week, saying that that they expect to probably have another 25 basis point increase in interest rates this year, and that we've heard officials saying all day that is still what they're foreseeing, and that they're not expecting any rate cuts this year.
Molly, what's interesting is I think about last year when we were all obsessed about inflation last year too, but back then it was very much commodities driven. You saw the price of oil surging above $100 a barrel, as high as 123, 124. It's really come down a lot. Oil's down, 30, 40% year over year. But is the concern now that the inflation is still working its way through other parts of the economy, through the service sectors? Is that why you think we'll still see these hot inflation numbers?
Yeah, that's a big part of it. And, officials have said that there has been some disinflation on the goods side, which is where you would see some of that commodities pressure and supply side elements, related to the supply chain now, which has largely gotten back in order. But it's really that services section, and particularly what Powell and the rest of the Fed like to look at, core services ex housing. So this is service activities that are excluding energy, excluding housing, and that's what they look at as this pure, more underlying gauge of inflation that's really tied to a lot of wage pressures that these businesses, paying their employees is a big part of their expenses, and that's what they're really most concerned about, related to the stickiness of inflation.
Yeah, that's interesting, Jess, because Molly was just talking about inflation and wages. For the tech companies, it seems like when these tech companies report that they're cutting staff, their stocks really go up. When in the past, I've covered these names since their inception, since they came public, the Facebooks and the Googles of the world. Every quarter, they would report with pride how many people they hired. Because it was such an arms race to get people, Microsoft competing against Facebook, competing against Google, competing against Intel. Now it's kind of the opposite. Those days seem to be over, at least temporarily here as they right-size the ship.
Especially over the past 6 months with the amount of big tech companies and growth companies that have announced this. So we've talked a lot, Paul, you and I, about even Meta, Facebook, whatever you want to call it. But that first big tranche of job cuts they had back in November, by the time they announced that second big tranche a couple weeks ago, its stock had already been up over 80% since it had announced those cuts, and since then is even higher than that. And so you're seeing that similarly with Salesforce and some other big tech companies, Intel, Microsoft as well, Micron Technology that also announced big cuts. And we had earnings earlier this week, but those job cuts in December. But yeah, to your point, Paul, we're definitely seeing investors rewarding those job cuts so far.
Yeah, Molly, I'm curious how you would reconcile sort of this anecdotal evidence of headlines about massive job cuts in tech with the macro data, looking at initial jobless claims today, 198,000, that is super low. Unemployment rate is still low. Are there jobs in tech outside of big tech that these people are migrating to, do you think?
That's part of it for sure. And I think the other thing to keep in mind is that while these headlines seem really big and alarming, in the grander scheme of a labor force that's more than 160 million people, it doesn't make a big dent. So that's important perspective to keep in mind. And something else that economists have also said is that a lot of these layoffs so far have largely been announcements, meaning they haven't actually materialized. So some of these people may very well still be on the payrolls for another month or so, depending on when they were announced. And also, they may be collecting severance payments, and in some states that could prevent you from applying for unemployment benefits, which could be another reason why they're still pretty low.
And Molly, Matt Miller's not here, so we can talk about we don't have to worry about him because he's an Ohio State guy. But we are going to get some Michigan data tomorrow. I mean, I think it's kind of important. I've always liked this University of Michigan sentiment data. It's got expectations information. It's got information on inflation expectations. But I'm not seeing a whole lot of improvement month to month. This month estimates versus last month. That's a little bit concerning, I would think, to the Fed and to others.
I think what the Fed really looks at in the Michigan report has been the inflation expectations, and those for sure have come down, especially on the 1-year time horizon. So that's something that they've taken comfort with. They refer to that pretty often, that inflation expectations have been well anchored. On the sentiment side, I'm looking to see if maybe this will be another early indication of how the banking turmoil has spilled over onto the consumer side. In the early March reading, it didn't seem to have much of an effect. And the director of the survey said that these kinds of events don't really affect most people's everyday lives. They're more concerned about their jobs and their incomes. So we'll see if it, as people have some more time to process this, as credit conditions tightened throughout the rest of the month of March, if that has more of an impact on sentiment.
And Molly, this survey does take into account the after Silicon Valley Bank period, right?
Yes, correct. This will be for the entire month of March.
Right. So could be a shift from before and after on that. What, Miller doesn't let you talk about Michigan?
Well, he gets, whenever we have to talk about the Michigan data, he has to chime in that he is from the great state of Ohio. Not just Ohio. It is the great state of Ohio.
Ohio State
and then it's
University.
the Ohio State. We get into this whole thing before you know it devolves into a discussion of the Big Ten and, the Ohio State, Michigan.
I got a kid at the University of Maryland. I can kind of see where Matt's coming from.
Yeah,
on
you
that.
never should have left the ACC. That's all I have to say there. All right, guys. Bloomberg's economics editor, Molly Smith, thank you so much. We appreciate it. Jess Metton, she covers equities for Bloomberg News. And again, it's going to be interesting, Mike. I'm going to really be paying close attention because I'll be in the studio again early tomorrow. But just checking out some of this data and see, what a lot of the learned folks say about how the Fed may interpret it.
Yeah, and the surprise element of these inflation reports has kind of subsided to some degree. There was a stretch there where they just kept coming in higher and higher than expected, and I think that's somewhat gone away.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg with the Dow, the S&P, NASDAQ all advancing right now. 38 minutes to go before the closing bell clangs on Wall Street. S&P right now up 19 points. That is a gain of 0.5%. The Dow up 116, up by about 0.4%. NASDAQ Composite Index higher now by 77 points, up by about 0.7%. 10-year yield 3.54% with a 2-year yielding 4.09%. Spot gold up 0.9%, 1981 the ounce, and West Texas Intermediate crude up 1.7% on WTI, 74.25 a barrel. Investors are digesting a round of comments from various Fed officials suggesting more monetary tightening is needed to fight inflation, even in the wake of turbulence in the banking sector. Now, so far this year, we do have the NASDAQ 100 index up 18.4%. As for the outlook for tech stocks, Dana Diori is co-chief investment officer at Investnet.
The repricing that we're talking about of growth stocks, and this, to the extent that the market is actually pricing in a pivot and saying, oh great, look at where rates are, that means the terminal value on these stocks is now high again. That's not the bet that I would be taking right now.
And Netflix shares, they are up now by about 2.2%. The 13th biggest issuer in the U.S. corporate high-yield bond market is the latest rising star to shake off junk status after Moody's Investor Service upgraded the streaming giant to investment grade. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate it. Mike, as Charlie was reporting, NASDAQ's up big. I mean, I'm looking at Meta Platforms up 72%, Salesforce.com up 50%, even huge mega cap Apple up 25%, all on a year-to-date basis. Then I go to my good friends at Google / whatever they're called these days, Alphabet, only up about 14%. It's not often you see Google kind of lag here. I wonder what's kind of behind it. Luckily, our next guest has a theory or has a story on it. Ryan Vasilica, he is an equities reporter for Bloomberg News. He joins us on the phone from Chicago. So, Ryan, what's the story here behind Google / Alphabet? Their stock performance on a year-to-date basis lagging some of its peers.
Yes, good afternoon. Thanks for having me. Yeah, it is a little bit of an underperformer this year. It has been stuck in a pretty narrow range over the past several months. I think the big thing that people are looking at somewhat recently, you have some antitrust movement going on there, and it's hard to tell what exactly is going to be the ultimate fallout of that, when there's going to be any kind of resolution there. That's certainly a question mark. It's hard to know exactly how much weight people are putting on this issue, how much risk they see from it, but that's certainly a big question mark that's out in the air. And I think on a little bit more immediate term basis, you do have new competition in the field for search-based advertising, especially from Microsoft and Bing with the new ChatGPT AI chatbot program. So that's an area that Alphabet has been investing in, but it does seem like, at least in the near term, people feel like Microsoft might have a little bit of an edge there.
Yeah, I would take a step back too, Paul, and say it's kind of funny that here we're looking at a stock that's up 14% through the first 3 months of the year. And we're like,
what's going on?
What's wrong with this thing? What's going on here? But right, let's unpack a little bit that whole ChatGPT story, because here you would think Alphabet and Google would be sort of the leaders in AI, and I mean I think historically they have been, but this ChatGPT just kind of came out of nowhere, and at least out of nowhere for those of us who are not following this super carefully and closely. But what is the deal there with Google and AI? Are they is their lunch being eaten in that technology?
Well, first thing I would say is that it's still so early in the development of this technology, the deployment of it, its ability to be a major revenue generator for Apple or Microsoft or anyone else. It's still very new. And I'll also add that Alphabet has been investing in AI for years. So even though Microsoft seems like it has a little bit of an edge just with all the attention being paid to ChatGPT and OpenAI and so forth, it's hardly a done deal by now. But the major issue is, if people start using this kind of chatbot technology as a replacement for traditional search, that does kind of threaten Alphabet's market share in internet search, where it's so dominant right now that some people have told me sort of the best case scenario is that it maintains its market share. It's kind of vulnerable right now to losing some to new entrants like Microsoft.
So what are the folks at Google saying? What is their response to what could be a longer-term threat to its traditional search business?
Well, people have deemed it a kind of code red inside the company, so they are really much, they are aggressively spending on this. It does seem like costs are coming down a little bit from what I've been able to gather in my reporting, but they did launch their Bard chatbot. There was sort of a demonstration it gave where it gave a wrong answer, and that kind of spurred some additional just near-term jitters about like how ready are they to compete with ChatGPT and all the high-profile use cases that are being done there.
Ryan, traditionally Google Alphabet has had, I guess what I would call a healthy valuation, maybe bloated is too strong of a word, but certainly, traded at a premium to benchmark indexes. What is the story now that the NASDAQ is booming and Google's kind of going along for the ride, but not really leading it? What do those valuations look like compared to history?
Yeah, so right now, Alphabet is trading at 17 times forward earnings, which is a discount to its average over the past decade. It's also trading at a discount to the NASDAQ 100 right now. And relative to all the rest of the other big tech names, it actually stands as something of a bargain. So both Apple and Microsoft are expensive relative to their own history and to the market. Amazon is cheap relative to where it has been historically, but it's much more expensive than the market, just looking at forward earnings. So at least on this metric, this is something you can say for for Alphabet. It does look like it's a little bit cheap right now. There were some concerns last year about the strength of the ad market. We might be moving past that. And if there is kind of a broader cyclical recovery, it is likely to participate in that on the upside. So it does have some fairly rosy growth prospects, at least based on where estimates currently stand right now. But of course, the AI question is unanswered at the moment.
Hey, Ryan, I look at the PGEO function on the Bloomberg terminal. One of the things it allows me to do is to kind of see the different segments and how big those segments are for different companies. And for Google, their cloud business, it's only about 9% of total revenue. That's, I guess, kind of the downside. The positive spin on is it's growing really quickly. But it's not as big as what you see at Microsoft or Amazon or some of the others. What's kind of the feeling out there in Silicon Valley and just the marketplace about Google as a player in the cloud?
Yeah, that's a great question. It certainly feels like an also-ran relative to AWS and Azure at Microsoft. But one of the investors I spoke to just said that it's possible that Alphabet's cloud business turns profitable faster than other people are expecting right now. And it said that the ability for profits there are basically hidden in plain sight, to quote him. And once that happens, he says the narrative might turn a lot more positive surrounding the stock. If this does become a significant growth vector, that might be a more positive thing, although it's growing quickly, but off a much smaller base than the competitors you mentioned.
One thing I find interesting about Alphabet is they don't tend to give guidance, right? So the analysts are kind of in the dark to some degree. I'm looking at their last 4 quarters, and they trailed analyst earnings estimates 4 quarters in a row by double-digit percentage.
You don't see that very often.
Yeah, and mixed reaction in the stock market afterwards. They fell 3 of the 4, rose 1, but Ryan, it just makes me think, what do we know about the earnings outlook for Google? I mean, I know they had a little bit of a tepid search advertisement environment last year. Does it feel like it's picked back up? Is it, is that still going to be their main driver of growth?
Well, advertising is certainly going to remain a very major part of the overall revenue picture at Alphabet. I do think we are going to start nearing a point where we approach easier year-over-year comps with respect to growth, and that is, at least on the surface level, going to be a positive trend, even if there is still some lingering question about how much people are pulling back on ad spending in a bleaker economic outlook overall. And I'd also flag that Alphabet recently announced some job cuts and some other cost cuts like that, which is, if nothing else, a cushion to profitability.
Yeah, and I'm looking at the FA function, Ryan, on the Bloomberg terminal. A couple things jump out at me. One, 15% earnings growth is a consensus for 23, going up to 19% in 24. So the street's still pretty positive. But man, I see a fortress balance sheet here. I got $113 billion in cash. The company's going to throw off $70 to $80 billion of free cash flow. So if they want to throw the kitchen sink at this search business and really try to compete with anybody out there in terms of any changes, they certainly have the balance sheet to do it, don't they?
Yeah, and this is something that is pretty universally cited about Alphabet, is that it does have this incredibly strong balance sheet. This is one of the reasons that big tech kind of overall has been an area of somewhat stability so far this year, especially given the turmoil elsewhere in the space. And this is also a major reason why Alphabet remains so well liked on, among Wall Street analysts. Like more than 90% of analysts recommend buying the stock, at least according to the A&R function on the terminal.
Yeah, I love the A&R function.
It's a great function. I'm just looking at the 12-month price target, 127 versus a stock that's about $100 now. So about a 27% upside there if the analysts are right.
Good stuff. All right, Ryan, thanks so much for this story. Really appreciate you taking the time. Ryan Vestelica, he is equities reporter for Bloomberg News, joining us on the phone from Chicago. And it's interesting. Think about how search has changed our lives. It's unbelievable how many times a day we use it. And Bing was never even a thing.
That's the thing. Whoever thought that Google would get challenged the way it is, and really just theoretically at this point, I don't think anyone's really using these chatbots to search, but someday maybe they will.
But you think about how they could evolve.
Right.
But that's one thing. The other side is I just can't imagine Google ever taking their eye off the ball and kind of losing their position. But a lot of people said that before about a lot of different businesses. Let's head down to Washington, D.C. right now. More to national news with Nancy Lyons.
Thanks, Paul. The White House is not mincing words when it comes to the arrest of Wall Street Journal correspondent Evan Gershkovich by Russian authorities on espionage charges. White House Press Secretary Karine Jean-Pierre.
These espionage charges are ridiculous. The targeting of American citizens by Russian government is unacceptable. We condemn the detention of Mr. Gershkovich in the strongest terms. We also condemn the Russian government's continued targeting and repression of journalists.
Jean-Pierre says the State Department has been in direct touch with the Russian government on the matter. Following this week's mass shooting at a Christian elementary school in Nashville, House Minority Leader Hakeem Jeffries says it's time to get tougher on guns. He wants a bill brought to the floor that calls for universal criminal background checks.
It's time that this Congress put kids over guns. That's what House Democrats want to do.
Jeffries says he'll press the House Speaker to take up gun safety. The FBI is giving more details about the deadliest mass shooting in modern U.S. history. Bloomberg's Nathan Hager reports.
The Bureau released a trove of documents last week, including records from the 2017 concert massacre on the Las Vegas Strip. The Wall Street Journal reports the records don't fully answer the mystery of Stephen Paddock's motive for the shooting. He killed himself after taking 58 lives and wounding hundreds more. But a fellow gambler told FBI agents that Paddock was upset about casinos taking away some VIP perks for high rollers. He says that stress could have easily been what caused Paddock to snap. In Washington, I'm Nathan Hager, Bloomberg Radio.
Baseball is back. The Braves lead the Nats 4-2. The Yankees beating the Giants 5-0, and the Orioles are leading the Red Sox 5-2. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:40 on Wall Street, a move higher into the close. We've got just about 19 minutes to go, and we do check markets all day long here at Bloomberg. Right now, let's head over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks in the green right now. Dow currently up 144 points. S&P's gained 24, and NASDAQ is higher by 0.8%. The U.S. 10-year yield at 3.54%. Gold is trading higher by 17. Energy is also climbing, but Bitcoin is lower by 1.5%. Of the main 11 S&P sectors, only financials were in the red, and leaders to the upside in the Dow, Intel and Boeing, while American Express and J.P. Morgan led to the downside. In other news, Boeing is going to lift the 737 MAX production above 31 a month very soon, and the Fed's bargain sees real risks in the commercial real estate sector. Wrapping things up, Schwab fell as much as 6%. Shares were downgraded over at Morgan Stanley. Live from the first to breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill. To hear live breaking news over you, Bloomberg, type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
You know, Carol and team, Michael, they have the best music at Bloomberg Business Week show. I like it. They just...
It's amazing how many driving songs there are.
Driving songs there are. Right? You can get a montage of driving songs, but somehow Bloomberg Radio figured it out. Let's talk about these markets here. Again, we're going to get a lot of eco data tomorrow. Markets will certainly be paying attention to that as we try to decipher where this Federal Reserve is going to go next. Let's talk to a professional about this. Francis O, APAC Chief Executive Officer for Kraft Technologies, joining us on Zoom from Hong Kong. We appreciate Francis staying up for that. Kraft Technologies provides investment advice using artificial research. That's where I want to start. Francis, how do you guys do what you do? What do you do?
Thank you for, first of all, thank you for hosting me. Yeah, we do providing the AI-powered investment solutions to the other financial institutions. So we have currently 20 plus the financial institutions as a partnership companies. And what we do is from the stock selection model and asset allocation model, and also leveraging our AI for the risk prediction of the financial market. And that is the range of the service we're providing. And also we have our branded ETF in NISE, but maybe nowadays one of the most the welcome solution by our client are, as market is so much there's just so much volatility in the market right now. The clients are focusing a bit more on the market, the beta risk prediction model of the what you're providing to them.
Yeah, Francis, you know, there's been so much news and hype about AI this year because of the innovations with ChatGPT and these other AI chatbots, which, you know, they're so easy to sort of understand where this technology is going when you see, tell the thing, give me a dad joke about, Paul Sweeney or something like that, and it spits something out right away. But how exactly is AI employed with a firm like yours? Is it, like you were saying, is it creating models to try to predict volatility or macro trends? Break it down for us a little bit about how exactly you're using AI.
Sure. So some let's think about this way. Nowadays, one of the most the distinctive trend in the investment society is the data-driven investments. Not even the top-tier hedge fund, but at the same time, the many of the traditional asset manager loan-only funds, they are start to buying the more and more data to make their decision from the full discretion to the more towards to the data-driven investment the side. And what we are providing for our AI is trying to process the fundamental data, the macro data, and the price data, and plus a little bit of the other types of data, including the sentiment and natural language, etc., and trying to give the augmented intelligence for the portfolio manager for them to having the more timely and more accurate decision maker powered by our AI model. So for example, we have the product name as the AI risk indicator. For this one, we just providing to everything on our website as open public. And this one, how does it work is we are processing the 80 different types of the market data from the volatility, momentum, and correlations, and also the macro data, and processing that into our own proprietary the AI engines to predict what will be the expected downside volatility, or what will be expected downside risk of the next 1 week of time. And this one, the interesting thing is regarding the Silicon Valley, the bank's collapse, which happened in the 10th of March this month. Our model is actually sending a signal that the market may have the more fluctuation. We were not able to predict what will be the certain event, but anyway, we were sending that the risk signal the 2 weeks prior. After 2 weeks prior, the Silicon Valley Bank's collapse. But at the same time, interesting thing is starting from the beginning of this the week, our model is sending that the signal that maybe worse, maybe over. So
what is it? What is that risk indicator telling you now? What's the biggest risk going forward?
Yes. That risk indicator is telling that we have to focus on 3 different the input data right now. Absolute level is definitely coming down from the last week, but still the primary the companies our risk model is seeing at this moment is the 1 month's momentum of the U.S. equity market right now, the 1 month's momentum, and the second thing is the U.S. short-term Treasury the volatility. We can translate that as the MOVE index, and the last one is commodities, that 1-year volatility. These 3 the input features are what our AI model is telling that these 3 is most important out of 80 different input variables to navigating a market volatility. And speaking of the short-term momentum is interesting because when you look at the last 1 year, the short-term momentum as a 1-month momentum as a rolling basis, we were able to see when market is down by around the 6 to 7%, and that is the typical area of when the market is forming, market is turning around from its bottom, and we were exactly seeing when the Silicon Valley the banks collapsed. That day, the 1 month's momentum of the U.S. stock market was negative 6%, and we are seeing that there was a little bit of volatility. But anyway, that was the moment of it may be too early to say, but that was the moment that the market was making the bottom, start to bottoming out of the worst time. And the Treasury volatility is also interesting because the MOVE index still very high. It's still somewhere around the 150, but it was down from the 180, where was the same level of what was happening in the 2008 during the financial market crisis. So it's still bad, but it's better than week before. Also, commodity, the market is definitely worse to look at. There's quite a divergence of the commodity prices is seeing at this moment. Some of the commodities are the pricing coming down, but at the same time the energy prices start to show some bouncing back. Yeah, but further, when you look at the Bloomberg Commodity Index for the last 1 year, that is negative 16%. Mine is down 16% over the year, and it could be some good relief of the what will come from PPI or the CPI going forward.
All right, Francis, thank you so much for joining us. Really appreciate you staying up late. I guess I just kind of say they're kind of 12 hours ahead, something like that. Francis O, APAC Chief Executive Officer for Craft Technologies, joining us on Zoom from Hong Kong. So we appreciate him giving us his thoughts here. AI is everywhere.
Can't escape it.
You put AI in your conference call, and your multiple is going to go up, like 20%. You just start talking about AI. So good to see it's being applied even to the investment biz. All right, we're going to have more coming up. This is Bloomberg Business Week.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pella. 3:53 is the time now on Wall Street. Tesla, according to sources, looking to build a battery plant in the U.S. in what would likely be a controversial arrangement with China's dominant electric vehicle battery manufacturer. Tesla shares, along with the rest of the market, they're up now by just about 1%. JD.com shares soaring in the U.S. after two of its subsidiaries filed for Hong Kong initial public offerings, paving the way for some of the year's biggest debuts by a Chinese tech company. Shares of JD.com up 7.7%. Roku says it will restructure its business and cut about 200 employees, roughly 6% of its workforce. Let's get to more from Bloomberg's Kimberly Adams.
Charlie, word came in a regulatory filing. Roku also said an unspecified amount of unused office space will be vacated or sublet as Roku moves to prioritize projects the company believes will have a higher return on investment. San Jose-based Roku, which makes set-up boxes used to stream services like Netflix, said it estimated one-time costs of $30 million to $35 million to cover severance payments and other charges. According to the filing, the majority of job cuts will be completed by the end of the second quarter of this fiscal year. Charlie?
And that's Kimberly Adams reporting. We've got Netflix, actually shares of Roku down 3.5%. Netflix, the 13th biggest issuer in the U.S. corporate high-yield bond market, latest rising star to shake off junk status. Moody's upgrading the streaming giant to investment grade. Those are some of the company stories we're following this hour. I'm Charlie Pellett. This is Bloomberg.
You're listening to Bloomberg Business Week. It's now time for Wall Street Daily. David Weston speaks to the top names in finance and economics, taking on the week's biggest issues on Wall Street.
All right, this is time for our Wall Street Daily segment. Today, Bloomberg's David Weston speaks with Eric Gordon, professor of the Ross School of Business at the University of Michigan, on the challenges ahead for former UBS CEO Sergio Ermotti.
He has double the trouble. In any merger, there's, the standard problems. Integrate the IT systems, figure out who's going to be, in HR, who's fired or not. But with banks, you have double trouble because you have to figure out how to integrate the risk management. So now you have a new asset profile. UBS has its assets. It has Credit Suisse's assets. It has its own liabilities. It has Credit Suisse's liabilities. It's a whole new risk management game, and boy, if there's one thing we've seen in the last 2 weeks, managing both sides of the balance sheet is critical at a bank. Then they have to figure out things like what lines of business are they going to keep? Are they going to keep two investment banks at all? What about the trading desks? Wealth management, investment products? And then finally, they have to go through the clients and the customers. Which Credit Suisse clients do they want to keep? Do they want to keep them on the same credit limits with the same credit pricing? Integrating two systemically important giant banks is really double trouble.
So, Eric, you teach the question of mergers and acquisitions out at the Ross School. Give us a sense of what makes a merger work or not work. And specifically, I'm curious about culture. We saw the memo come out from Colm Keller, the chair of UBS, saying we're going to put a culture filter on Credit Suisse people. That may have been not the perfect words. At the same time, by all accounts, there are two very different cultures here in these two very big banks.
That's probably the biggest stumbling block for mergers. You can calculate a lot of other things on spreadsheets. You can do lots of boxes and arrows planning. But culture you can't change quickly. It takes...
All right, that was Eric Gordon, professor of the Ross School of Business at the University of Michigan with the Bloomberg's David Weston. You can hear more from that interview this Friday on Bloomberg Wall Street Week with David Weston at 6 p.m. Wall Street time on Bloomberg Radio. And, we saw that news, Michael, UBS acquiring Credit Suisse. Long term, boy, some of these people are really bullish on it. Somebody spoke to some analysts. Long term, that could be really good for UBS.
Well, yeah, that's what happens when you get a little bit of a government assist on a big takeover, I guess.
You get a world-class bank at a discount. We'll have more coming up.
Closer to the closing bell, full market coverage right here on Bloomberg as we take you to the bell and beyond. Stick with us. This is Bloomberg.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
All right, we're about 2 minutes away from the end of the trading day. I'm Scarlett Fu here with Katie Greifeld. We're counting you down to the closing bell. Here to help us take you beyond the bell with the global simulcast, Paul Sweeney and Mike Regan. And of course, in doing so, we bring together our Bloomberg television, radio, and YouTube audiences worldwide to parse through the most crucial moments of the trading day. And again, another day where things feel a little bit more placid, things feel a little bit calmer. We're all fixated on Fed speak, but it didn't really change the tone of the market too much today. Paul?
No, it didn't. You know, the last couple of days, we've seen some pretty solid trading volumes kind of coming in line with where they've been over the last 30 days or so. So no real movement there. Again, a lot of key economic data tomorrow, most notably getting some inflation data. And of course, that is key for this market because that is key for this Federal Reserve. So we're seeing some cautious buying right before we get that eco data, Mike. And tomorrow's going to be important, and we'll have full coverage, of course.
Yeah, you know what, Paul, I find interesting is, though, we've seen this strong momentum in the stock market recently, but hasn't really moved the needle on the bets in the short-term interest rate market about what the Fed is going to do. Fed fund futures still pricing in probably 2 rate cuts by the end of the year. I got to think they weren't listening to Neil Kashkari today at all. You know, he was saying basically, look, Fed has got to get inflation down, and we will. He's saying we're committed to that 2%. And even, Katie, when discussing the banks, he said it could take a while yet to get wholly through this bank crisis, and it's just unclear now whether there will be a credit crunch. So it's not like they're unaware of the bank issues. They're just laser focused, Katie, on that inflation story.
Well, I mean, we heard the same thing from Susan Collins, too, that there's more tightening to come, Scarlett.
Yeah, absolutely. All right, so 3 seconds to go, and there you have it. It's another gain in the books here for the major markets. The S&P 500 adding 0.6%, 4,050, which, by the way, matches the average year-end target among strategists that we surveyed for the S&P 500. How'd that work out? The Dow Industrials up by 0.4%, and the NASDAQ, the clear winner here, up by 0.75%, with the NASDAQ 100 firmly in bull market territory.
I wonder if we're not going to see those strategists, Scarlett, start to raise their forecast here, because as Mike was just talking about, if you look at the WIRP function, the market's pricing in discounts, and I learned not to fight the tape. So I wonder if that's going to bring some bulls out, and as we exit, or as we start the second quarter, Katie.
Well, we definitely had bulls out when it comes to the industry groups. You look up right at the top there. It's chips. Once again, that has been one of the enduring stories of this year. A lot of that powered by NVIDIA, just on a tear. You look down the list. You also have some retail up there as well, and real estate. Both of those industry groups up by over more than 1%. You go down, you have to go all the way down to the bottom to find some red. And if you're looking for red, look no further than the banks. That industry group off by about 1%.
Yeah, it's interesting. Good day for the techs. Led the way again. We've got Amazon up, Apple up, as well as Microsoft. So some of those tech leaders leading the way, which goes back to a question I posed to a lot of fund managers is, tech led this bull market since the great financial crisis. It was a leader of the market. Can it once again attain that leadership position on the other side of this rate hiking session?
Yeah, Paul, on the downside, take a look at Match. This is a stock that's just been hammered over the last year, down about 80% from its record high in 2021, down about 4% today. Interesting story because they had a big pivot planned. They were going to introduce a Tinder coin, a cryptocurrency, to be used on Tinder, I guess, and they wanted to do dating in the metaverse. Well, they sort of scaled back all those plans late last year and early this year, and now if you look up their news, it's just shareholder lawsuit after shareholder lawsuit about what's going on with Tinder and why they scrapped those plans. Also on the downside, Charles Schwab down about 5%. Now, remember when all the discount brokerages eliminated commissions, that made Schwab basically very dependent on net interest margin like any other bank. And Morgan Stanley out with a note cutting their rating, analysts removing his buy rating on the stock for the first time since he began covering it 7 years ago. And it's all about that deposit flight. You know, Schwab sweeps up uninvested cash, puts it into a sweep account. Customers of Schwab instead are taking that unused cash and putting it in money markets. Morgan Stanley flagging about $20 billion a month being lost from Schwab's sweep accounts into money markets. And finally, we got to talk about these regional banks again. Another weak session. First Republic down 4%. Analysts really catching up with this stock. Piper Sandler reducing their target price for FRC First Republic from, get this, from $145 to $15. Quite a reduction.
There you go. I'm still thinking about Tindercoin, but I'm going to try to power through right now, talk about the bond market. Let's look at some of the Treasury yields, which did nothing. Once again, boring is beautiful. For a second day, we've seen very little moves in either direction in the bond market. You can see 2-year yields. They rose 1 basis point down if you look at the 10-year, the 20-year, the 30-year. So it's interesting. Even though we saw this huge repricing, a lot of cuts priced in, you saw that hit the 2-year Treasury yield in particular over the past few weeks. Haven't really seen a lot of it taken out, at least if you look at absolute yield levels.
Yeah, and I just want to mention also Bed Bath & Beyond closing at a record low. The stock is now at 59 cents, so it feels like it's approaching that penny stock level. And of course, Bed Bath & Beyond warning of bankruptcy risk.
Right? There's not too much lower you can
I know,
get.
this is true. This is true.
Bed Bath and Below, am I right?
Yes. Oh, I
wow.
heard that. Well, I have a soft spot for Bed Bath & Beyond. It's from Union, New Jersey, which is the town over where I live. Flagship store right there. So it's been kind of bittersweet for us in that area.
I will
but boy,
say every memory I have in a Bed Bath & Beyond is positive, but I haven't been there since I went to college.
Carol Massar is screaming at the radio right
is
now. She's not a fan. Yeah, she always gets lost, I think.
Well, also right now, all the shelves are empty. When you were lost before, at least there are things to look at, but there's not anything left on the shelves because they haven't gotten their inventory right in so long.
Supply chains, they haunt us.
Also, just bad decision making overall.
That's true. But
not everything's supply chain anymore.
Yeah.
You know, looking ahead, there are a lot of Fed speakers today. You had Barkin, you had Collins, you had Kashkari. Tomorrow, there's even more. There's Williams, Cook, Waller, Messer, and Bullard.
Why?
I mean, why? Have they always spoken this much, Mike?
Well, you know, we're in between those quiet periods, so they're allowed to go out and speak, and you know. We'll see if it's a mixed message. I mean, it seems like every one of them that gets up to the microphone sort of asserts this notion that, look, we're not planning on cutting rates. How many times do we have to tell you there's no plan to cut rates?
Exactly.
But you look at the futures market and
they obviously don't have access to the WIRP function on the Bloomberg terminal. But I go back to Christine Lagarde a couple of weeks ago with the ECB. They raised their lending rate 50 basis points, and her rhetoric was just as hard-nosed and hawkish as we hear from the U.S. Fed. So we'll see what the markets price in when we get that data tomorrow.
Well, we learned from reporting after the fact that ECB move, definitely the bank's credibility was behind that decision to some extent. Basically, they said that they were going to do this, so they felt that they needed to sort of not spook markets any more than they were spooked. So even though, you know, we do have a lot of financial instability concerns, we know that these central bankers, they've worked hard to win that credibility when it comes to fighting inflation, and they do not want to lose it.
Also, I mean, it's the end of the quarter. We're not going to hear anything from companies just yet for a couple of weeks before they start pre-announcing. So in the meantime, everyone's fixated on what Fed officials have to say. But we have an entire month before, no, more than that, a month plus a couple of days before the next FOMC meeting. So there's going to be a lot to digest before the next FOMC meeting.
Katie just wants to know what it all means for Tindercoin. Is it
What does it
bullish
mean?
for Tindercoin? But one thing that settled down, I got to say, that 2-year yield basically hasn't moved today. 4.10%.
It's a nice change.
Yeah, up less than 1 basis point. So up a little bit, but Paul, not like that 2-year volatility that we have been seeing. So that's good news, I think.
No, and Tom Keene is not here, so I want to go out with a Bitcoin quote here. We're sitting just below $28,000 on Bitcoin, down about 1.4% today. But boy, what a move crypto's had and Bitcoin really over the last several months. It's been one of the winners here in 2023.
Oh, big time. And what's interesting to me, I mean, outside of what's actually going on with the coins themselves, if you look at some of the crypto-linked equities, some of those publicly listed crypto miners, for example, they're actually outperforming crypto itself, Bitcoin itself, even though a lot of those miners, we know that their margins have shrunk big time, because even though we're at 28,000, obviously that's not 69,000. It's not anywhere close to the all-time high. So we know that these companies, their business models have changed, and yet you would not know it by looking at the stock price.
That's so interesting, given how CFTC sued Binance and its CEO. The SEC also took action against another cryptocurrency company. Doesn't matter. People are looking for different ways to diversify, and they're finding it with crypto-adjacent companies.
That they are. Guys, this was sublime, but I have to say, that does it for our cross-platform coverage of the market close on Bloomberg Television, Radio, YouTube, and Bloomberg Originals. And a reminder that Bloomberg Business Week is now on Bloomberg Originals.
Yay.
We'll be back tomorrow, same time, same place.
All right.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, here's a story that really gets my attention. Alibaba Group. This is a company that's got $267 billion market cap. And it was up 3.4% today. It's up 17% year to date. But it's well below its high of several years ago. Why? Because the Chinese government came in and said, we don't really like tech stocks getting so big. I'm just simplifying it there down to my simple level. And it's been a tough time for all the big Chinese tech companies, including Alibaba.com. But they came back with a pretty interesting strategy announcement. We're looking to break up into 6 companies, and the stock likes it. The market likes it. Brian Wong joins us. He's an author. He's an entrepreneur. He's a former Alibaba executive. His book is The Tao of Alibaba, Inside the Chinese Digital Giant That is Changing the World. He joins us on the phone from Shanghai. We appreciate you staying up late, getting up early, however it works over there, Brian. What do you make of Alibaba's plan to split up into 6 separate units?
Well, good early morning from Shanghai. Thanks for having me, guys. Yeah, look, I think this is a very exciting time for the company. This decision to split up the organization provides a massive opportunity to unlock lots of value at a time when I think the market has become much more competitive. The company has become large and in some ways too bureaucratic. So I think this bodes well for their ability to kind of recreate themselves, but also find new direction in many of its key businesses.
Yeah, Brian, I'm curious how you think the government views this breakup of Alibaba. I mean, is it, do you think they were sort of whispering in Alibaba's ear that this is something you should do? Is it advantageous, do you think, from the government's perspective to not have it be one big conglomerate, but to split it up?
Well, I mean, to be honest, I don't think they really needed to have to whisper, because the writing was pretty clear that, there is a new sort of perspective on big tech in China. And I would argue that this isn't unique to China because, as we see in the hearings and different sort of government policies, whether it's U.S. or Europe, I think big tech now is here in a way that many governments feel that it's outsized in terms of influence. But in China in particular, they've used different measures to try and address this. And I think it's really part of Alibaba's approach to evolve and adapt to these market environments or these regulatory environments at the same time. So, yes, I think part of it is a response to a new sort of situation. And this is quite, I think it's good for both the business and a way to address the government regulations.
Brian, when I sat at the New York IPO luncheon for Alibaba, and I listened to my good friend Joe Tsai and Jack Ma talk about the great company, I was bought off on the story hook, line, and sinker. And I looked at the risk section, the prospectus. It's about 50 pages, but it didn't really matter. There's only one risk to this stock, to this company, to its U.S. listing, and that's the China risk. At any given day, China could come in and just shut off the lights, and that is effectively what they've done. My question is, does this breakup satisfy the Chinese regulators? Do you think these independent companies can, in fact, operate, without such, onerous restrictions? Can I invest in some of these companies now?
Well, look, I think there's 2 factors at play here. One is kind of the ability to understand and see what the companies are doing, and providing more transparency, I think, will be the case with these 6 companies broken up. There's be more visibility at a granular level in terms of, which companies are doing what, whether it's in logistics, whether it's in media, which is, a sensitive area, whether it's in commerce, cloud. So I think that's probably comforting from a government regulatory perspective. But second, I think, there's definitely a role for business in China that's consistent with what the government wants, and that's really just to keep things moving, job creation, bringing prosperity to the larger population, providing jobs. And I think that, this is something that both the company and the government are highly aligned on in terms of wanting to create a prosperous business, a successful business, but at the same time, helping the local economy continue to grow. So, yeah, I think that as an investor, if you see those things being aligned, then you're going to have less concern about that China risk. But, I think time will tell. I think what needs to happen now is that the government needs to demonstrate how it can manage and regulate the industry and at the same time allow it to flourish in the way that everybody hopes.
Brian, in your book, you write about how Alibaba's corporate culture is fairly unique. I believe you call it a Tai Chi management type of principle. Talk to us a little bit about what that means. What sets Alibaba's culture apart? And is there a lesson there for other companies?
Sure. I'm glad you brought that up because in my book, I do talk about its management approach, particularly with regard to organizational structure. And one thing I did highlight is that in 2013, there was a similar sort of approach to how they restructured the company. They had 3 major business units that they broke up into 7, and then those 7 units were broken up into 25 smaller business units. And this was done really with the purpose of trying to, again, unlock value and allow for the entrepreneurial sort of spirit to flourish amidst a time when competition was really heating up. What happens when you're an organization the size of Alibaba is that you have a lot of new entrants that sort of, chew away at the edges, but at the same time, you're fighting multiple fronts of battles. And so if you're too concentrated, you have one, CEO looking over multiple business lines, it becomes very difficult and decisions are very difficult to make in a timely fashion. So this is not unprecedented. And this Tai Chi concept is really, this balance, this shift between, concentrated and then decentralized, concentrated, decentralized. And what I see here is really a move to kind of, again, decentralize the business in a way that will allow it to address these problems or challenges that it's facing. And so it's almost like a cycle. And I think that Daniel and the team have been thinking about how best to address the challenges they face now as a much larger organization, but also in an environment that is very different, from the past when they
right. Hey, Brian,
when they were more consolidated. Yeah.
Any idea where Jack Ma is? Not kidding.
Well, I think the recent news highlighted the fact that he had returned to Hangzhou. I think it was 2 days ago. He was visiting Yungu, which is a school that he created with the partners.
How much does the government need him to sell this new face? That, hey, we're back open for business for technology. How much do they need Jack Ma?
Yeah, and I wonder if there's a connection between him being seen in public again and this news. Is he sort of out of the doghouse there, do you think?
Well, I think it's certainly encouraging that he is physically, present in China, and I think it also sends a very strong message to those at the company and those in the community that one of China's top entrepreneurs is back in China. Obviously, he's focusing his time more on his other pursuits like philanthropy and other things. But I would say that the fact that he's in China is a very good thing for the business and for the industry as a whole.
So, Brian, do we know whether any of these entities want to raise capital in the West going forward?
Well, I'm sure you've heard or read the rumors that Cainiao is looking to list. Cainiao is the logistics business. Yep. That's the first of this group that might take this path of an individual IPO. When you say West, I'm assuming you're referring to
New York, London,
ADR market here.
Yeah. So if you look at the list of businesses, one of them is Global Digital Commerce Group, and that's really the businesses outside of China. Okay. I think that could be a potential track. Yeah.
All right, Brian Wong, thank you so much for joining us. Really appreciate it. In those early hours over there, Brian Wong, he's author, entrepreneur, former Alibaba executive. Yeah, his book is The Tao of Alibaba, inside the Chinese digital giant that is changing the world.
headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ all advanced today. Tech shares propelled stocks higher as Fed officials reiterated their resolve to lower inflation. S&P 500 index up today by 0.6%. Even with financials under pressure, the S&P up 23 points. That index now at 4,050. The Dow today up 141 points, up by about 0.4%. NASDAQ Composite Index up 0.7%, up 87 points. The NASDAQ 100 Index also higher today by 0.9%. 10-year yield 3.54%, with the 2-year yielding 4.10%. Spot gold up $16 the ounce, up 0.8% to $19.81. West Texas Intermediate crude rallied 1.8%, $74.31 a barrel. Peabody Energy says yesterday's fire at an Alabama coal mine is unlikely to have a material impact on the company's 2023 financial results, even though it is unclear when production will resume at the facility. Peabody, which uses the ticker BTU, up today by 0.3%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Charlie Pello, thank you so much. We appreciate it. $4 billion outflow from ESGU. What is ESGU? It's the largest ESG ETF. That happened in just last week, much of it in one day. What's going on there? Let's check in with Shaheen Contractor. She is our environmental, social, and governance analyst at Bloomberg Intelligence. She is our go-to person on this. She joins us here in our Bloomberg Interactive Broker studio. So you get a gold star for coming into the studio. We appreciate that. Mike and I are very appreciative there. Talk to us about ESGU funds flows flowing out. Tell us what happened, do you think?
Sure. So Paul, first of all, $4 billion is massive. And, even though it's the largest ETF, ESG ETF, this is still massive. And I think the point is that while this looks like model portfolio changes, so this just means, it moved in and out of one of BlackRock's big model portfolios, what it really points to is concentration risk. And we've spoken about that for a while before.
Okay, so that means just a handful of investors.
A handful of funds, not investors. Correct. Well, investors also, but more funds. Okay. So just as a statistic, last year, about 10 funds accounted for 22% of flows. And when there are 1,000+ funds, that's not good, right? You create this dependency. Do we know who they are? Yeah, ESGU is one of them for sure. Okay. So a couple of the clean energy ones are also. Okay. But what happens is when one of those 10 funds run into trouble, you have this massive outflow because you've created some form of a dependency. And that's just concentration risk unraveling.
Yeah, and ESGU, $14 billion market cap fund, so $4 billion in flows leaves a mark, I guess. But Shaheen, obviously there's been a lot of political noise this year about ESG in general. Backlash, a bill in Congress that President Biden vetoed. Obviously, Florida Governor Ron DeSantis, a potential candidate for president, is very anti-ESG. Do you think is any of that affecting flows, do you think? Or could it be a risk going forward, at least?
I think it's a risk going forward, very much so. In terms of it affecting flows and causing the outflows, I don't think so. So I would say that a large part of the investor base for ESG is very institutional. These are, not the investors who are going to one day wake up and say, oh, no, I don't want ESG. So I think the outflows a lot, this concentration risk may have something to do with ESG. It may not. They might have just not wanted equity and dropped it. Who knows?
So we mentioned a big fund. Like, I think of BlackRock. They are committed to the nth degree to incorporating ESG analysis into their research. And they're the biggest money manager out there. How about the other big ones, like a Fidelity and people like that?
So BlackRock is the largest that has funds, right? Is a fund manager. If you think about investors, who's investing in these funds, it's Envest. I think Envest has something to do with BlackRock also. Okay. It's the Finnish pension fund. It's the California pension fund. So again, you'll see it's very institutional.
Right.
And how about performance, Shaheen? I mean, obviously, you can invest in ESG because you are concerned about the environment, and social issues, and corporate governance. But I think to really get those flows, you need to put up the numbers. How does the performance look like? I'm looking at ESGU, and it seems like it's at least matched the S&P over the last few years, maybe beat it once or twice. In general, what does the performance look like?
So ESG, first of all, is very sort of benchmark hugging. So it sort of tracks the benchmark very closely. It's not really a good gauge of performance. But all in all, I think in 2020, a large share of ESG ETFs beat the benchmark. I would say it's somewhere above 60% because of tech. Tech outperformed. ESG funds have a lot of tech. And then last year, that number fell drastically. I feel like it fell to somewhere around 20% because obviously tech underperformed, energy outperformed. ESG funds are complete opposites. So what I'm going to say is that ESG funds, they behave differently in different market environments, I guess, just like any other strategy. I mean, also from a factor lens, these funds tend to tilt a little bit towards low volatility and quality, so they tend to outperform in this bear market, but they underperform in a bull market. So it adopts sort of its factor and sector styles, I
Here's
guess.
a little trick that Matt Miller taught me. You put in any ticker for any company you're looking at, and then you equity go. Then you put COMP for comp, and that gives you comparative returns, and its default is 5 years. So I put ESGU, Mike, up against the SPX, as you pointed out. It's almost spot on. So now if I were a financial advisor and I had somebody who had, my selling pitch would be, hey, I'm going to buy the S&P 500 and you're going to do some good.
Yeah.
That's it. I mean, you're not going to outperform, you're not going to underperform, you're going to perform right, that's the good pitch. The bad pitch is, this kind of feels like a scam. You're just indexing me.
So the thing is, it has to be how much of ESGU you're getting versus your fees. Now, the one thing I don't like about ESGU is it costs 15 basis points, which in my mind is pretty high for a benchmark hugging fund.
Okay, right? Good point. Yep.
It's pretty high. If you want to be...
hang around Balchunas too much.
I have. I really have. He's rubbed off on me. But I would say, there's nothing wrong with being benchmark hugging, but then charge a lower fee.
Yep, that's a great point. Great point.
Well, what the other thing about being benchmark hugging is, if you're sort of sector neutral, right?
Yeah.
And you score companies by ESG, you could buy an ESG fund that's still, say, buying Exxon or, companies that you don't think of as ESG friendly stocks. Where do you think ESG is going in the future? Will it be more sort of a pure ESG play where you really get rid of the stocks that are environmentally dangerous or, have bad governance, that sort of thing?
I tell you what I think. I mean, I would love for it to be a little more of a sector neutral view of things. I mean, I don't see why ESG should be so much tech. It's not like tech is great in ESG. So what we really believe is within a sector, there are certain stocks that are good and there are certain stocks that are bad. I would say, within a sector, just adjust for it. Don't create some kind of, short on energy, long on tech kind of scenario.
Yeah. Do they hold any ESG conferences in Miami?
I came back from I came back from one in West Palm Beach yesterday, actually.
Really?
Yeah, an
Okay.
ESG conference. It was interesting.
I'm surprised they even hold it because I mean
Disney World, I would put it in.
It was the Opal ESG conference. They had it last year, so they had it this year at the same location.
Okay, because it's interesting because I was talking to Tim Craighead, who helps run our research in London. He's our product guy. He's been on the street forever. He knows what's going on the street. And I was asking him about the interest in ESG because we are getting a little bit of a pushback here in the U.S. And I asked him about Europe, and he says absolutely not. They are all in. And he highlighted the Scandinavian countries. Now, those are countries that are dependent upon oil, yet they are committed to going green energy. It's amazing. So it is regional, I guess, a little bit.
Yeah, so remember I said that pension fund, one of the largest investors,
Finnish,
that's a
yep.
Scandinavian.
Well,
right?
well, the Norges is one of the biggest ones.
Norges is one of the
Norges,
biggest. So
Norway.
they've shoved it down everybody's throat. Yeah.
So you need to go talk to those guys over there.
I want to. Anybody listening? Send me there.
Well, it's like I'm looking at the holdings of ESGU, and they're number 10, Exxon Mobil Corp, at about 1%
Really?
of the
Yeah,
fund.
yeah,
So
yeah.
what makes Exxon arrive at an ESG fund? Is it more the S and the G than the E, I guess?
So I'll tell you what I think ESGU does. Like I said, very benchmark hugging. So they tend to remove only the bad scores, and they tend to, I think they tend to reduce carbon intensity, right? Scope 1 and Scope 2. So I would see Exxon as sort of making that cut because they're not the worst in oil and gas. And at the same time, their Scope 1 and 2 is not too great, right? Their Scope 3, being an oil and gas producer, is very high. So they wouldn't get cut out. What would get cut out is maybe the steel guys, the cement guys, the ones that have a higher, carbon intensity of their own operations.
Do you find that the registered investment advisor community, the brokerage community, the private wealth management community, are they embracing ESG? Are the retail customers
The
embracing?
retail crowd. In the U.S., I don't think so.
No.
So from what I've seen, they find ESG to mean so many different things.
Right.
They like to adopt more concentrated portfolios. So they say, low carbon, I understand it, I'm going to go for it. Clean energy, understand, great. ESG is, so many different things. They don't want to try and understand it.
Yeah, because people have different priorities, right?
Yeah.
What do you got three main big topics there, and you look at it from different
So
perspectives.
they tend to go for the simpler stuff.
All right, and I will point out on the FA function on the Bloomberg terminal, which is one of the most widely used functions, and it gives you income statement analysis, balance sheet analysis, cash flow statement analysis. There's also an ESG tab, which gives you lots and lots of data on how to score ESG and see how companies compare. You can do a lot of, and what's the BI page?
BI space ESG.
BI Space ESG for all the research you need on anything ESG related on the Bloomberg terminal, led by Shaheen and her team over there doing that great stuff. And we do it on a global basis. We got people in Europe and we got people in Asia doing ESG. So Bloomberg is all in on this ESG stuff. We appreciate it. Shaheen Contractor, ESG Analyst, Bloomberg Intelligence. Let's head down to Washington, D.C. right now. Nancy Lyons has got world and national news.
Thanks, Paul. The Biden administration is condemning the detention of an American Wall Street Journal reporter in Russia for what Moscow describes as espionage. Evan Gershkovich pleaded not guilty at a hearing earlier today, according to TASS. The State Department's Vendit Patel says other Americans in Russia are now at risk.
If you're an American citizen in Russia, you should leave. And if you need assistance doing so, our embassy in Moscow is at the ready to help.
Vendit Patel says since Russia invaded Ukraine, it has escalated repression against journalists. The House Subcommittee on the Weaponization of the Federal Government is looking at censorship and whether the Biden administration directed social media companies to eliminate misinformation.
John Sauer, the Missouri state lawyer in the case, was invited in by Chairman Jim Jordan.
20 White House officials were involved in these suggestions to social media platforms. Were most of those targets conservatives?
The vast majority of what we see so far is conservative, right-leaning speech.
You'd be just as outraged if it was the other way around, right?
Absolutely, because it's
same here.
The Democrats' view was voiced by Representative Debbie Wasserman Schultz.
Studies show conservative voices are more prevalent on social media. This hearing is fixated on a red herring.
Republican Chris Stewart likened the administration's efforts to those of communist-era secret police. In Washington, Irv Chapman, Bloomberg Radio.
Joint Base Andrews, just a few miles from the White House, is on lockdown after someone reported seeing someone with an assault-style rifle near base housing. The facility is home to Air Force One. The base says no shots have been fired and no one has been injured, but the base has tweeted the incident is ongoing. Major League Baseball has returned. The Braves beat the Nationals 7-2. The Yankees shut out the Giants 5-0. The Orioles lead the Red Sox 10-4. No score in the Mets-Marlins game. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries.
headlines and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. We check markets all day long here on Bloomberg. We begin with a developing story headline from the Bloomberg Professional Service. Banks reduce their borrowings from 2 Federal Reserve backstop lending facilities in the most recent week, a sign that liquidity demand may be stabilizing. U.S. institutions had a combined $152.6 billion in outstanding borrowings in the week through March 29th, compared with $163.9 billion in the previous week. Tech stocks propelled the market higher today as Fed officials reiterated their resolve to lower inflation. Kathy Jones at Charles Schwab said Fed officials are firmly focused on the inflation fight.
The Fed doesn't look like they're going to give up easily, and so probably means, we'll get further rate hikes and further downward pressure on growth and inflation and lower bond yields down the road.
And today we had the S&P 500 index gaining 0.6%, even with financials under pressure. The Dow up 141 points, up 0.4%. S&P was up 23. NASDAQ up 87, a gain of 0.7%. 10-year yield 3.54%. 2-year 4.11%. Spot gold up $16 the ounce, up 0.8%. West Texas Intermediate crude up today by 2%, $74.41 a barrel. Apple shares have already jumped 25% so far this year, but one analyst has an unlikely idea to generate even more gains: by Walt Disney. Needham analyst Laura Martin sees material upside for the iPhone maker if it buys the media giant. Disney up 1.3% today. Apple did gain by 1%. And again, repeating our earlier headline, banks reduced their borrowings from 2 Federal Reserve backstop lending facilities in the most recent week, a sign that liquidity demand may be stabilizing. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Well, improving inclusion is a big issue in society. It's a big issue for corporations, the C-suite, and that includes financial inclusion. Our next guest focuses on that. Shamina Singh, she's the founder and president of MasterCard's Center for Inclusive Growth. She joins us on Zoom from New York City. Shamina, thanks so much for joining us here. Talk to us about what financial inclusion is.
So first of all, thank you so much for having me here. It's an incredibly important topic, but it's a pretty simple idea, and that is that everyone in the world deserves to be engaged in the formal financial system. I think it's probably surprising to a lot of people that there are many, many hundreds of millions of people around the world who don't participate in the formal economy, and they actually spend most of their currency and most of their time and energy transacting in an environment that is mostly cash and mostly insecure. And so the idea is that we as companies, as regulators, as governments, all need to come together to ensure that as many people as possible have access to the rules, the regulations, the responsibilities, and the benefits of engaging in a formal financial system.
So, Shamina, what are some of the priorities there for inclusion? Is it as simple as getting more people to be able to open bank accounts, investment accounts, all the above?
Well, look, I think it's all of the above, but at its core, I think it's about making sure that people do have access to bank accounts or some sort of account that allows them to store their money safely, spend their money securely with them being in charge of it, and ensure that they have things like insurance and the ability to spend in a way that aligns with their responsibilities. You know, over the last 10 years, what's interesting is we have been able to work across the world to actually increase financial inclusion by 50%. There are over 75% of adults around the world now that do have access to formal bank accounts. And I have to tell you that when we first started on this journey over 10 years ago, that was definitely not the case. So it's working, but there's more work to do.
Shamina, is this primarily an emerging markets issue? And if so, where are some of the key markets that you guys are really focused on now?
It's funny, I just landed from Ethiopia today, this afternoon, and that is a market that is just ripe for expansion. It's opening, it's exciting, it's growing, but the vast majority of adults in Ethiopia don't have access to formal regulated bank accounts. But that's not the only place. I mean, there are pockets around the world, certainly, but even here in the United States, in developing economies, there are millions of people that don't have access and don't participate in the formal economy. So I think we'd all be surprised at how hard it is actually to engage in a responsible way in the economy. And it's also one of the reasons why we're convening the Inclusive Growth Summit, but also calling on the administration and members of Congress to pass a national financial inclusion strategy in the United States.
So for a country like Ethiopia, what are some of the barriers that are preventing people from participating in the financial system? I'm guessing one is just not a lot of brick and mortar banks. Is it as simple as that?
I wish it was as simple as that. And it's becoming easier with mobile phones and cell service and the digital divide hopefully decreasing over time. The opportunity is there for more people to participate. But oftentimes, because people transact in cash, they're paid in cash, they spend in cash, it's hard not to participate in a digital economy. And so one of the things that we saw during COVID, and I don't think people will be surprised by this, is that those who were not able to operate more digitally really fell behind the curve in their ability to transact and succeed in a digital economy. And so I think that the urgency of now and the urgency of anyone either from Michigan to Mumbai to participate in the formal economy through digitization is an extremely important topic for us to tackle.
So Shmita, this seems like an opportunity that would be ripe for a public-private partnership type of thing. There's so many really amazing fintech companies out there, and if I could get my technology into some of these areas, you could really make a difference. So talk to us about how governments approach it.
Yeah, it's interesting, and you're absolutely right. Like for issues related to not only financial inclusion, but shared prosperity, inclusive growth, climate, all of the things that we're focused on in our individual silos, whether it's private sector or public sector or social sector, the opportunity now is to actually move from silos to solutions and really break down the barriers that exist between public, private, social sectors to ensure that we bring all of our assets, all of our superpowers, if you will, together to ensure a strong and positive collective outcome for everyone.
So, Shmita, with this summit coming up next month in April, what's top of the agenda there? What are some of the priorities?
The top of the agenda, I think, is the urgency of now and making sure that we're bringing together the right leaders at the right time to form common cause around the issues that we're all facing. The calamity of climate change, the fundamentals around financial inclusion, the opportunities related to inclusive growth, but also the idea that, with all of the new technology, all of the ChatGPT, AI, all of the things that we're asking questions about, the opportunity now is to say, how are we ensuring that those technologies work for us, not against us? And those are the kinds of topics and conversations that we'll be discussing at the Inclusive Growth Summit by people who are at the top of their game, by the decision makers who can cross boundaries to ensure that what we talk about actually becomes implemented in action.
Hey, Shmita, just about 10, 15 seconds. If an immigrant in the United States is here illegally, can he or she open a bank account?
It depends. It depends on a couple of things related to the banking regulations. But if they're here legally, they can absolutely open a bank account.
Okay. There you go. I mean, it's very interesting because I remember it's very interesting. Shmita Singh, founder and president of MasterCard Center for Inclusive Growth, joining us on Zoom from New York City. But I remember working at a bank in college, and the illegal immigrants would just go to, and after I worked at the bank, I worked at Eddie's Donuts right next door. And they'd come in, cash their checks, and buy money orders because they couldn't open a bank account. And I was just like, really? All right, we're going to have more coming up. This is Bloomberg.
your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet, reeling from a collapse in its stock price and at the mercy of Wall Street banks. Bed Bath & Beyond is warning it will likely go bankrupt if a last-gasp $300 million equity offering fails. The retailer filed to sell new shares to stay afloat and repay creditors after a hedge fund rescue effort faltered and as day traders, famed for bidding up loss-making companies, flee. Bed Bath & Beyond today down 26%. JD.com shares soared in the U.S. after two of its subsidiaries filed for Hong Kong IPOs today, paving the way for some of the year's biggest debuts by a Chinese tech company. Shares of JD, the ADR, is up 7.8%. Peabody Energy says yesterday's fire at an Alabama coal mine is unlikely to have a material impact on the company's 2023 financial results. And with more, here's Bloomberg's Tom Busby.
Charlie, the statement comes even though it's unclear when production will resume at the facility. In today's update, the biggest American coal producer did not provide details of when operations would restart at the Shoal Creek mine just west of Birmingham. It said exhaust air shows acceptable air quality and atmospheric conditions, and the company is working with the Mine Safety and Health Administration on a reentry plan. That mine produced about 800,000 tons of metallurgical coal for the steelmaking market just last year. Charlie?
And that's Bloomberg's Tom Busby. Shares of Peabody Energy up today by 0.3%. Those are the company stories we're following for you at this hour. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenovec on Bloomberg Radio.
All right, Michael Regan, Paul Sweeney sitting in for Carol Masser and Tim Stenovec. Right now, let's looking at this market, we're up about 0.5% on the S&P. That was a nice close. Let's get a check on the latest world and national news right now with Nancy Lyons in the Bloomberg 99.1 studio in Washington, D.C.
Thanks, Paul. Kentucky Governor Andy Beshear says it's a tragic day after 9 soldiers died when 2 Army Black Hawk helicopters crashed on a night training mission in Trigg County, Kentucky.
The 9 individuals we lost are children of God. They will be mourned and missed by their families, by their communities.
Again, Kentucky Governor Beshear, an aircraft safety team from Fort Rucker, Alabama, is investigating how the crash occurred. Congress is about to adjourn for a 2-week Easter recess, and Democrats are hoping to use that time to restore their ranks. Bloomberg's Amy Morris explains.
Senate Democrats are hoping spring break can help them get healthy again. Several members have faced health challenges, which means only work on nominees and legislation with bipartisan support are getting attention. But after the break, Pennsylvania's John Fetterman and Dianne Feinstein of California are expected to return. Democrats hope a restored majority will give them better odds to beat back measures the GOP can bring up unilaterally, like rolling back student loan forgiveness. In Washington, I'm Amy Morris, Bloomberg Radio.
Pope Francis's health is improving after being hospitalized for a respiratory infection. According to the Vatican, the Pope is continuing with treatment and he slept well. It's still unclear if he'll be able to participate in the Vatican's Holy Week observances that begin on Sunday. A federal judge in Texas says insurers no longer need to provide certain preventative care services for free. U.S. District Judge Reed O'Connor decided those Affordable Care Act mandates cannot be enforced nationwide. That includes some cancer and heart screenings, STI testing, and programs to quit smoking. It is opening day for Major League Baseball. We do have some scores in. The Braves beat the Nationals 7-2. The Yankees shut out the Giants 5-zip. The Orioles lead the Red Sox 10-7. That game's still going on. The Mets lead the Marlins 1-0. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Back to you, Paul and Mike.
All right, Nancy, thank you so much. We appreciate it. March is Women's History Month, and every day this month we are celebrating significant moments in women's history. Now with your installment for Thursday, March 30th, here's Bloomberg's Lisa Mateo.
On this day in women's history in 1911, Ellen Swallow Richards dies. She was the first woman admitted to Massachusetts Institute of Technology, earning a Bachelor of Science degree in 1873. 2 years later, Swallow Richards continued to break barriers, asking the Women's Education Association of Boston for help